Good morning, everybody. Good morning, buenos dias. How are you guys doing? Good. Good morning, Miss Adriana. GWC, nice to see you. Cheetah, good to have you. Hey, Mr. Flowers. Daryl, PC. All right. Everybody's awake. I like this. Hope you guys had a great weekend. Good morning, Jeffrey, Muser, Hamid, Pete. Good to have you guys. Anybody study this weekend? I did. I did a little market replay, a little pattern recognition, all that good stuff. Awesome. Telling you guys, repetition is the key. Everything that we do is patterns. And I've dropped that picture in the room, guys. I did it again. We did the same one last week. And here it is again. You know what, Mr. Flowers? Even better. Don't ever give up a weekend with your wife. When I was traveling, I'd always be in the middle of class when she left for work, and I would always pause class because she would come in and say goodbye, to the point to where the class teased me a little bit. They're like, oh, Mark's kissing his wife. Don't ever give up a weekend with your wife to look at the markets. The markets will always be there. Guys, this was kind of cool. This is the exact same pattern 2 years apart. The exact same pattern, or 3 years apart. Two different markets, exact same pattern. And it's funny because I took this exact same picture last week on a different market. So it just keeps happening, guys. The same thing keeps happening in the markets over and over and over. So we're going to figure out how to take advantage of that. Give me 1 second, please. All right, I want to make sure everybody gets into class. So guys, we're going to focus on patterns today. We're going to do the same thing we do every day. But before we start trading, while the charts are opening, drinking coffee, smearing cream cheese on a bagel, guys, I go to news. I go to forexfactory.com/calendar, and I start looking to make sure that I'm not going to trade into anything weird. Today's Monday, June 10th, and there is no news, which is pretty cool, which means I don't have any expectations of that market suddenly changing direction on me. Every morning I'm looking for high impact, I'm looking for medium impact, and I'm making sure, guys, I've kind of committed to myself and I've written it into my trading plan. I refuse to trade into a news release because I don't know what the reaction is going to be. There's people with a lot more money than me that may react, and I don't want to get caught up in their decision making. So for me, that's it. Either the news is there, it's not. I choose not to trade into it. And if there is a news release, I'll wait until that market kind of gets back to a normal speed before I try to take a trade. Everything that I talk about every day. My poor dog just locked herself in the room. Everything that I talk about every day, guys. Okay, Adriana, fire away. Comes from the education page. 100%. There are no secrets. I'm always looking for ways to make it easier to teach. Why in your investing there are news? I don't know, Adriana. I can't see over your shoulder. Here we go. Let's take a look. I don't know. I don't know. We go to different places. So maybe the place I go has a different criteria. Maybe our filters are different. Maybe you have, hold on, let me put that one in there. No, I put all of them in there. I don't know. I wish I had an answer for you. I don't know. Do you trust your news? Do you trust E-Trade? And the cool thing is what's the worst that's going to happen if you have your guard up at 11, right? They may have different criteria for news releases. I really don't know. I've never used E-Trade from Morgan Stanley for it. I've been using the Forex Factory for as long as I can remember. and it's taken good care of me. Guys, there's probably 100 different places you could get financial news. Pick one and trust it, I guess, is the easiest answer. Sorry, Adriana, that wasn't very helpful, was it? Not so much. But I wanted it to be. Sometimes, guys, I don't have the answers. All right, so this is this is the nexgent3.com page, guys. I'm sure you've all been here. If you hover over education, it'll take you to the training guide, and the training guide is where everything that I talk about comes from. You new folks, guys, I'm telling you, there is nothing that I keep from you. There are no secrets. Jonathan, it's okay. Nope. So when we talk about termination conditions, we'll talk about pivot stop outs. So I'm going to leave this one up, and I'm going to put a note to go to your picture for pivot stop outs. So when we talk terminations again, Jonathan, make sure that you're listening to me there. But there's some cool information on the other chart as well. So, whoop, look at that. There's yours right there. And Jonathan, do you remember that? 1, 2, 3 divergences? So what we're going to do, guys, is we're going to focus heavily on what we call a high probability trend trade. And this is coming from the glossary of common terms, guys. A high probability trade is when each indicator on every chart agrees for the trade. There's the strongest triggers. There's nothing in your way, nothing between you and your target, none of those termination conditions. Guys, this is your foundation building exercise. This high probability trend trade is a trade when you learn to take it by the rules, typically wins 70 to 80% of the time. This is a trade that creates an enormous amount of confidence through the memory of success. I love it, Morgan. And guys, this is the trade that teaches you to read your indicators, and that's really the most important thing that it does. There are so many ways to make money in the market. There are so many ways to enter the market. There are so many ways to manage the market. But the thing is you've got to be able to read your indicators to find those advantages, to be able to recognize those advantages. So this high probability trend trade, guys, this is what I talk about for the first hour every day, recognition through repetition. This one turns you into a chart reader. And guys, 90% of your day, literally 90% of your day is spent reading indicators. I watched the NASDAQ for 2.5 hours this morning. I didn't take a trade because I couldn't get my rules met. 2.5 hours of doing absolutely nothing. And there's two things that happened. The first thing is I didn't make any money. Didn't make any money in the first part of my morning on Monday. That's okay, because the market's going to be trading for hours and hours. But the second thing that I didn't do is I didn't lose money when I didn't have an advantage. I didn't take a trade when my rules weren't met, which means that I basically never had a statistical advantage. I never had a pattern materialize that repeats itself and wins more than it loses. So therefore, I never took a trade. I was chart reading all day, 2.5 hours of chart reading, saying things like it should and it might and it could and I wonder if, but I was never able to say my rules are met. And that's kind of the difference between people that want to be rich and people that want to be consistent. So consistency tends to lend itself to success. So you're 90%, guys, chart reading your indicators, waiting for advantages. The 10% is when those rules are met. That 10% is when you have to have the courage to pull the trigger, when you have to stick to your plan, when you take your rules. And that 10% becomes very easy to spot when you're comfortable and competent as a chart reader, because you're going to understand where the market is likely to continue. And that really does become your entry for the highest probability trend trade. You're going to understand where the market is likely to go. This is going to let you make intelligent choices on targets. And then you're also going to understand where the market is likely to stop. And we call these termination conditions, guys. Termination conditions kept me out of the market this morning. Termination conditions are where the people that are in charge of the market, the people that move it, that create trends, that establish momentum, guys, they react at these places that we call termination conditions. You're going to have a pretty easy recipe to recognize them. But what it did is it told me without question, this is where the market's likely to stop. Don't take that next trade. Wait a second. Let's see what happens. And guys, everything that I did this morning wasn't an accumulation of experience. It was having a very simple plan with a very clear look that I understand, and either my rules are met or my rules are not met. And that's kind of my hope for you guys, is that you let trading be easy. The high probability trend trade only has 3 rules, guys. That's it. There's not 1,000 variations and addendums, and you have to go to the appendix and maybe phone a friend, guys. It's just 3 rules. And each rule creates an advantage. The first rule is that the large chart has to have strong triggers. And if it does, you will have the advantage of momentum, guys. You'll be looking at a situation where the market is likely to continue in the direction of the trend. We also have rule number 2, which says no termination conditions are present. And that's none of those likely to stop areas, guys. Nothing in your way that could reverse the market. And when there are none, you're going to have the advantage of a clear path. You will have room to your profit targets. So rules 1 and 2, guys, these are the 2. These are the monies. Because these are the ones that are going to open 1,000 doors for you as you grow with the software. Initially, rule number 3 is going to give you the entry area, the highest probability, best of the best, where the market is most likely to continue area. And that's going to get you into the market because you have momentum and a clear path. And all these 3 rules, guys, they're going to happen on only 2 charts. 1 bar on the large chart is going to define the direction of the market, guys. The most current bar, whatever color the background is behind the most current bar, is the direction of the market for the brand new user. So if it's red, the market's going down. If it's green, the market's going up. Let it be simple. Rule number 1 on the most current bar on your large chart is going to define the momentum of the market, whether you have that advantage or whether you don't. You're also going to understand whether or not these lines on a large chart are problematic. Once your first 2 rules are met on the large chart, guys, the large chart leads the way. You're just going to turn your attention to this smaller, faster chart. This is where rule number 3 comes in, guys. And this is where the precision of what we do becomes kind of mind-boggling. Because when the large chart says that you have momentum, when the large chart says that you have a clear path, we're going to take an x-ray of that 1 bar. See how the box is around just 1 bar? These are all the bars that are inside of that 1 bar on a smaller, faster chart. And you are literally going to be able to pinpoint right where that market is likely to continue down with momentum, to continue down with a clear path. So you always hear the old adage, buy low, sell high. You're going to use that smaller, faster chart to pinpoint exactly where high and low are. And the reason we use 2 charts, guys, is because the large chart, this is what the large crowd wants, the people that are in control. And this is hard for me to accept, and it's difficult for some of you guys to accept. You're not in control. You will never be in control. You will never be the guy that makes the market go up or down. You'll never be the lady that makes the market go up or down. So it's easier to go with the flow. If the large chart says up, go up with it. And if the large chart has momentum, let's go in the direction of that momentum. And if the large chart doesn't have anything in the way, well, then this large crowd's more likely to push it in that direction until they hit something solid, guys. There's always a small crowd. These guys fight, right? And they rarely win the fight. They give it just enough shove back to get a better entry to go with the big crowd, guys. And we're going to take advantage of this because this happens all day long. That's that refinement process, being able to pinpoint exactly where the market is most likely to continue. So this is going to be our focus for the first hour, maybe hour and a half. Who knows? Maybe 2 hours. I don't know. It just depends on how long it takes. And I'm going to tell you guys, especially if you're brand new or if you're a little hesitant to post in the room to ask a question, I don't want you to be. This is my room. I have a basic idea of what I want to talk about every day, but I have no time schedule. I don't have to be done with a topic by a certain time. Guys, we can drill momentum into the ground for 3 hours if that's what it takes, and I don't want you to be shy about requesting that. The first hour is a conversation. Well, it's more of a lecture, I guess. The first hour is kind of a lecture, learning those rules, understanding the looks. And then after that, it's just conversations. You guys are going to post pictures in the room. and we're going to talk about them. You're going to post every trade that you take in the room, and we're going to talk about the advantages that you saw. We're going to look at your entries. We're going to look at your exits. And every time you post in the room, this is kind of the cool thing with Nexgen, is you're getting a private session with me. All you have to do is post in the room. So Jonathan posted in the room, and he said, hey, Mark, is this a pivot stop out? And I'm going to get to the section on termination conditions. We're going to get to rule number 2. And Jonathan's going to get a one-on-one, right? You guys should probably listen in, but he's going to get a one-on-one on what it means to have a pivot stop out. And we're going to make sure that he's comfortable with it. I'm going to make sure that the clarity is there. And I'm probably not going to move on until he gives me a thumbs up and says, all right, Mark, let's go to that next lesson. And that's how the classroom works, guys. Everybody's at a different point in this room. It's kind of like, do you guys remember newspapers? Those things back a long time ago had comics in them. They wrote newspapers at a 7th grade level so that everybody could have access to the newspaper. Everybody could have access to the news. This class is very similar, guys. I cater to the lowest common denominator. Good morning, Zorro. I cater to the person that's 2 days in rather than the person that's 3 or 4 months in. I'll take care of all of you, but the goal is that everybody gets that foundation so they can grow from it. The fastest way to get to where you want to be is post in the room, guys. If you have a question, do exactly what Jonathan did. Take a picture of it, point it out, say, hey, is this what I think it is? If you take a trade, drop it in the room. But the most important thing that you can do is tell me why. Tell me why you did what you did. Tell me what your chart read was. Because our goal right now is to become a chart reader. Our goal is to be able to look at our indicators and understand advantages so that we can turn our chart reads into a rules-based trade. So I want you to tell me what you see on the large chart. I always want you to reference these 2 things, momentum and path. Let me know. Was it strong? Was there anything in your way? And then I want you to make sure that you're showing me where you're getting in, where you're getting out. Because what's cool is it won't take you guys very long to get really good at reading this large chart and being comfortable with it. And then we go through that refinement process of making sure that you're not in too early or in too late, and making sure that you're not holding when the market is telling you that you shouldn't be in that trade anymore. So every time you post in the room, guys, we're going to talk and we're going to take one step together to get you to where you want to be. So post in the room. And then the second thing is use that spreadsheet, guys. I'm sure when you guys thought, man, I'm going to be a day trader, I'm going to invest in the markets, you probably went to the CME site. And I hope that you noticed that one of the first things they tell new users is you have to keep a trade journal, is you have to keep track of what you're doing so that you know what you've been doing, so that you know where you're at so you can track your progress. So Nexgen gives you a spreadsheet, guys. Every time you download software, you get it. I give mine in the room every day. We update it every day in class, and I literally go just like this. Look at the chat box, everybody. There is my personal trade tracking sheet. The first tab is where you are going to post every trade that you take. Win, lose, or draw, because we're looking for patterns. There's a couple links on how to paste them in there if you need a little help with the Excel spreadsheets. But this is everything that you do, guys. And the goal is that you're practicing the correct rules. So you're going to post them in here, and you're gonna be tempted to ignore them. The way to get the most out of the spreadsheet is every morning, guys, pour a cup of coffee, grab a Coke, whatever it is you do in the morning, and go back and look at what you did yesterday and ask yourself what worked and what didn't work. Because it puts you in this mindset where you start focusing on the patterns that are working. You start focusing on the patterns that are bringing you success. And you're going to notice that it feels easy when everything's right. And it's kind of a cool thing because you'll be about 20 days in and you'll be like, oh my gosh, that was the most effortless trade I've ever taken. And then you'll look at it, you're like, oh, all the rules are met. This is amazing. And you'll begin to recognize when you're breaking your rules because it will feel forced and it's going to make you nervous. But this brief historical every day, it's going to set you up for the day, guys. It will accelerate the learning process. And then the other half of that is every time you post in the room, guys, I'm pretty good with patterns in people. I'm good with patterns in the market, but I'm really good with patterns with people, which means that every time you post in the room, I'm going to go, all right, what did they do? And then if you give me 5 or 6 pictures, guys, if you give me 5 or 6 pictures in the room, we're going to begin to recognize your thing, whether it's trading in determination conditions or early entries or late exits or whatever it is. And then I kind of make it my mission to help you work through those challenges so that you can get to that next level. So we're going to learn the rules. You guys use the spreadsheet. I mean, use the hell out of the spreadsheet. This is your trade journal. As you learn the high probability trend trade, I want you snapping a bajillion pictures of the rules being met. Not necessarily every trade that you take, but actually going back and finding those strong trigger lines and making sure that there's no terminations and taking individual pictures. You'll piece these together. As you develop a trading plan, what you're going to be able to do is you're going to be able to take these patterns that repeat themselves, take pictures of them, annotate them, and say this is strength and this is a clear path. And when they fit the rules, you're going to fill up this green section. And this is going to be kind of how you build your trading plan. Mark, here's my picture. Did I read it right? I'm going to be like, heck yeah, Paul Flowers. That is every advantage and what a beautiful entry. And Paul's going to go, let me get that into my personal trade setups. I don't ever want to miss this trade. I have to know what it looks like. And then finally, the last tab, guys, this is where I've done a little bit of work for you. There's about 350 pictures of Nexgen users taking advantage of reading the software, of what it provides. There are entry sequences, long and short, for the high probability trend trade. I have included a very basic mechanical management plan for new users to help you overcome the fears and the adrenaline. And then there's just a lot of stuff that we see during the day, when to hold for bigger moves and patterns that repeat themselves, a whole section dedicated to termination conditions. If you make your section look like my section, guys, there will be no stopping you. There will be absolutely no stopping you. You are going to be the most proficient chart reader in the world. So we're going to take an hour. We're going to learn the rules, guys. We're going to look at 3 rules, 2 charts, keeping it easy. Simulate, practice, make mistakes, give yourself some grace. You're brand new. Simulator is where you want to make every mistake. Simulator is where you want to just, oh my gosh, I think this is a trade. Let me take it, drop it in the room. Let's talk about it, and let's just iron out any challenges. The goal is that you're practicing the correct rules, because one of the things that I see a lot, and this has been forever, is people that practice on simulator and they break rules and they take chances and they hope and they wish and they want. And what you're doing during this educational process, guys, is you're teaching your body that it's okay to break the rules. You're telling your brain, hey, we can change it when we're live, but the problem is your brain doesn't know the difference between live and simulator. So I always encourage people, simulate the way you want to trade live, right? Protect your money and take your profits and follow your rules and build that muscle memory. We're going to simplify heavily. We're going to talk about that high probability trend trade extensively. We're going to focus on those 3 advantages. It's my opinion that if you keep it simple, if you keep it focused, the average user can begin to recognize high probability trend trades inside of the first week. The more you try to find. So if you say, all right, I'm brand new, and he said, look at the high probability trend trade, but I want to find that jump in trade that I see people doing. I want to make sure that I can catch this tops and bottoms, and I need an edge trade, and I want an HVA trade, and I want to go counter trend. Guys, it's just too much. It's too much for the new user. So keep it really simple initially. I'm going to give you a rock solid plan to help you find the high probability trend trade. And I'm even going to give you a rock solid plan to find what we call a medium probability trade. And I'm going to define all of it. And you're going to have this awesome checklist to get you into the market. But you've got to learn the looks so they become easy, which means that you've got to go back and study. You've got to practice. You've got to simulate. And you've got to ask for feedback through pictures. And when you do that, guys, when you start filling out your spreadsheet, when your spreadsheet looks like this one, what you'll realize is that you can click on 10 of these links and they all look exactly the same, but they look the same and the market's not moving, right? They look the same and there's no fear of loss. They look the same and there's no adrenaline, which means that you're going to be able to take that look, and when you see a market that is actually moving, you're like, oh, I've seen this 1,000 times. I know exactly where my entry is. I know exactly where my stop goes. So That's our plan today, guys. Simplicity is the battle cry. So only 2 charts, large chart, small chart, only 3 rules. Momentum, clear path, and entry area, guys. You either have it or you don't. There's either a trade or there isn't. Let it be easy. Remember, 90% of your day, 90% of your day is waiting for the best of the best, and 10% will be capitalizing on it. So large chart, big crowd, guys. They have to have strong triggers. And the only way to have strong triggers is to trade with the direction of the market. If the background is green, the market's going up. If the market is going up, then we're only looking for rules to be met for high probability trend trades long. And if the background is red, the market's going down, and we're only looking for rules to be met for high probability trend trade short, which means that we have to have rule number 1 met. When it's green, both the small triggers, these solid lines, and the large triggers, the dashed lines, they must be green as well. When the colors don't match, you don't have strong triggers. It's a pretty easy safeguard, to be honest with you. Strong triggers means that the small triggers are up and above the large. There's space between the two. The large triggers are widening. The small triggers are above. Guys, the odds are favorable for the market to continue up. Odds favorable momentum is the battle cry that you're going to hear in the room every day. OFM, you're going to see it on charts. In a downtrend, small's below the large, larger wide, gap between the two. It's the space between the two. Lets me know that the odds are favorable for the market to continue down. When I have odds favorable momentum to the upside, guys, I'm going to buy Fibonacci support on that smaller, faster chart. I'm going to be able to pinpoint exactly where these tails on the large chart are most likely to form. We're not trading tails, but you're going to use these tails. Let me get my pew. You're going to use these tails to study. You're going to go back and learn how to circle tails and compare them with entries. But you will be able to pinpoint exactly where that tail is most likely to form and ride that momentum in the direction of the trend. And then if we can have strong triggers, well, then we can have weak triggers, right? Equal opposite reaction, guys. Weak triggers mean that the space has closed, odds favorable momentum has ended, and the small triggers have worked their way inside of the large triggers, guys. We call this a weakening of the large triggers. And when I have weak large triggers, anything can happen up or down. I'm a big fan of language, and I think that language pays dividends as you learn the software, guys. If you use the phrase, I have odds favorable momentum. If you use the phrase every time you see this look, anything can happen up or down, you're more inclined to stick to your advantages. So rule number 1 is not a forever process, guys. As a brand new user, best of the best, let's pinpoint some tails. Let's ride that wave of momentum. When one line gets inside of the large triggers from the small triggers, this is a visual. The market is slowing down. Your indicators are showing you, they're telling you, hey, there is a slowdown in the market. The small triggers are returning to the large triggers. As you become comfortable with your chart reading, you might find yourself still taking short trades here, but you're going to use that reading to make sure that all the charts agree that things are good. And you may even find opportunities with these anything can happen triggers, with these weakened large triggers. But guys, they're going to have to be managed aggressively. You're going to have to be so comfortable with your chart reading, especially on the small chart, that you're willing to enable jump ship if things begin to change against you. And these weak triggers, when they hit areas on the large chart, guys, it's a game changer. When they hit areas on the large chart, this can stop the market cold in its tracks. This can reverse the market. This can create this huge fight. And that's kind of how we get into the next rule, guys. On the large chart, once you have momentum, and let me ask real quick, is everybody cool with momentum? It's a pretty simple look, guys. It is large triggers and small triggers working together. This is the S&P. When I have the separation, guys, this is the best of the best. When I have that separation, the market's likely to push. Odds favorable momentum can break key areas. Odds favorable momentum, even, man, they'll cover mistakes that you guys make. Look at these weak anything can happen triggers preceding a reversal. Kind of cool. So you can go back and build some trust, guys. Momentum, there's a tail, right? Momentum. But that's only one piece of the equation. Now we have to talk about whether or not we have a clear path, whether or not we have room to get to our targets, guys. And that's rule number 2. Rule number 2 says don't trade into termination conditions. Don't trade into an area that may stop the market. That's all a termination condition is. This is large chart lines, guys. Lines on the large chart may reverse the market. And we're going to compare the area to the trigger lines. The same trigger lines that establish momentum are going to be the trigger lines that let us know if an area has the potential to stop the market, if an area has the potential to break, and that's a medium probability scenario, or if the area is broken, if we shouldn't be fearful of it anymore, it's in the rearview mirror. The areas that we're looking for on the large chart, guys, are blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1, cyan divergence lows, magenta divergence highs. And guys, lines on the large chart can create problems. So what we're going to do is we're going to just embrace a very simple recipe. I'm going to show it to you both ways, guys. The most current bar, if price reaches an area, decisions are made at lines, guys. And if price reaches an area, in this case support, and the trigger lines remain above, this is an area that may stop the market. It's not guaranteed to stop a market. It doesn't have to stop the market. There's no secret handshake to make sure that it does stop the market, guys. But the second price reaches Fibonacci support and the trigger lines remain above, you have to be willing to say my advantage is gone. I no longer have a clear path. I don't know what the reaction is going to be. So I'm going to wait. I'm going to sit on my hands. And it's either going to reverse the market or it's going to break. I'll know that it has the potential to break when the small triggers smash. Guys, I want you to embrace the word. Write it down. Smash. 2 to 3 points, right? Not just peeking its head through, but literally decimating that area. When the small triggers smash, but the large triggers lag behind, they haven't made it through the area yet, this is an area with the potential to break. It's still not a clear path, but you're going to be able to use chart reading with this potential. Maybe you can take advantage. And then once the small triggers and the large triggers both get through the area in question, well, now the area is broken. Support begins to behave as resistance. The path is clear. Let's look for our rules to be met. Let's look for that odds favorable. Let's look for that clear path. And everything that can happen going down happens going up, guys. This case, it's a divergence high line because I wanted you guys to see this because this one is ignored a lot. Price reaches the divergence high line. Can you guys give me a Y in the room if you see how both small and large triggers have remained below the area? This is a termination condition. This area may stop the market. It may reverse the market. Your clear path is gone. When the small triggers smash through with that odds favorable momentum, but the large triggers lag, it has the potential to break. But guys, this area is not in the rear view mirror until both the small and the large get to the other side. Termination conditions are probably the most broken rule for new users. So I want to talk about this look right here. And Jonathan, are you in here? Because this is going to answer your question on pivot stop outs, guys. You know what? Let me go to the user guide for the pivot stop out. I want you guys to see what it is. But the one thing that you have to be okay with, the one thing that you have to be comfortable with to really understand a pivot stop out is that price reaches the area first, guys. That is always the first requirement for a termination condition. So if price comes down and then goes back up, guys, this is what we call a pivot. That's it. Up, down, up, that's a pivot. If there is a loss of momentum at that pivot, guys, if momentum is not following price, your software is going to run a couple calculations. And if it's true, if there is a loss of momentum, right about here on the third bar, it's going to print a blue line from a low or a magenta line from a high, guys. And this is what we call divergence. Divergence is nothing more than a loss of momentum. Divergence is not a termination condition because price creates this line. Price doesn't reach this line. But when price comes back and reaches divergence low, the triggers remain above. Now it's a termination condition, guys. The recipe's not going to change. So price reaches, where are my triggers? But if price trades below the divergence line and then back above, we're going to call it a pivot stop out of a prior divergence line. And guys, this is a powerful, powerful, powerful termination condition. This says no more short trades. No more short trades. If price goes below and back above one of these divergence highs or divergence lows, this pivot stop out of a divergence high is powerful. And it becomes even more powerful when it corresponds with Fibonacci resistance or Fibonacci support. So pivot stop outs require first the pivot with the loss of momentum, and then price coming back to that. Triggers remaining below, trading above and back below. No more long trades into that area. So Jonathan, when we talk about this pivot, market went up, market went down. Here's your pivot. It has divergence, right? Do you see how this pivot did, in fact, have the potential to break, but it never really did? The large triggers didn't get above it. This would be considered a pivot stop out. Because price traded above, the triggers didn't break, and then it traded back below. Does that make sense, Jonathan? You also have the same look right here on your small chart, where price goes a couple ticks above the divergence high, and then trades back below. And guys, this is your pivot stop out look. And here it is right here. Here's your pivot. When price reaches the divergence high, the triggers remain below. Now it's a termination condition. Now it's a pivot stop out. And then the same is true. Resistance, triggers below, no long trades. 1-to-1s, triggers below, no long trades. Is everybody good with that? Price reaches yellow 1-to-1s, triggers remain above. Don't go short. Wait for the reaction, guys. It might reverse. It might bounce for a little bit. There it is at support. There it is at another one of those pivots. And what happens, guys, is if you really want to be comfortable with rule number 2, if you really want to get to a point to where you just don't trade into areas that may stop the market, open up your chart, right? And go and say to yourself, man, price reached resistance and none of the triggers broke, and look at that bounce. Pulled all the way back to support and came up. There's those yellow 1-to-1s to the freaking tick. There's one of your pivot stop outs, Jonathan, right at Fibonacci support. What a big untradeable bounce. Resistance, right? Pulls right back to the mid band. Everything's going down. Guys, there's so many instances of the market reversing and bouncing. Weak triggers right at a fib. Look at it go, right? 2 ticks off of support. Right into resistance. Triggers don't break. Right back to support, guys. Indecision. So if you go back and you just kind of say to yourself, more often than not, these appear to stop the market, which means that yes, they will break at times, but you don't have a clear path. You've lost your advantage. Rule number 2 isn't met. The path isn't clear. Good morning. What's up, Kenan? Good to see you, man. So guys, termination conditions. The most broken rule. Go back and study them. So I need a why from you guys. Lines on the large chart can create problems. Lines on the large chart require me to do the comparison of the trigger lines to make sure that my path is clear. Guys, study it. Go back, check it out, test it, see how often it works. There is one termination condition that will show up on the smaller, faster chart, guys. There is one termination condition where rule number 2 isn't met, where I no longer have a clear path. And I want you guys to remember. Let me open up this picture. Large chart is a 1-bar event, guys. It's a 1-bar event. There's all these fluctuations inside of the bar. So your small chart will show change that you can't see on the large chart. And the change that it shows that will take away your clear path is 3 divergences in the same price range. 3 losses of momentum in the same price range, and may terminate the trend. Notice that Nexgen uses the word may a lot. That Nexgen likes to say potentially, that you hear the language that says it could, but it's not guaranteed. Guys, we're never in control of the market. We'll never be able to predict the market, but what we can do is recognize patterns that either provide or take away an advantage. 3 divergences in the same price range is a pattern that may terminate the trend. It becomes more powerful with those anything can happen triggers, guys. The exact same lesson that you use to gauge momentum is the lesson that lets you know that these three divergences may be more powerful. It's more powerful still if the final pivot's higher than the previous or lower than the previous from a high. It's a head and shoulders pattern. So guys, what you get is three divergences takes away your clear path. So if the market is railing up, let's go back to the tops and bottoms section. I'm going to use some examples out of here. If the market's going down, good morning, John C., and the path appears to be clear and you're thinking about that short trade, three divergences from here shows you the change that the large chart can. It says no more long or short trades. Even with odds favorable momentum and a clear path, guys, three divergences might tell you, hey, don't take that long trade. It's destined for failure, and sure enough, it turns. So three divergences in the same price range, the only small chart termination condition, the only time on a small chart that I will say to myself, okay, no more long trades, no more short trades. And guys, that's termination conditions. We're 25 minutes in and we already have the advantage of momentum. And we already understand when areas have the potential to break, when they're broken, when they're not broken. So guys, let's do the quick lesson. This is my large chart on the S&P. Do I have odds favorable momentum? Can everybody see it? Small below the large. The most current bar is giving me this information. Small's below the large, larger wide, angle of the direction of the trend, odds favorable momentum. Do I have a clear path? I want you to focus on this fib right here. My small triggers are below the area, but my large triggers are not. Right now, I have the potential, because of the momentum, for this area to break. Guys, this area is not broken yet. The only way this area will ever be considered broken is if both the small and the large triggers get below. That's exactly right, Jen. This is what we call a 50-50 look. 50% of my triggers are through, 50% are not. Guys, this may have been a great opportunity. When we talk about entries, we'll go back and look at it, right? We'll see what that tail looked like. That may have been a good shot for a short trade with all that momentum and the potential to break. But it's not broken yet. And if you're a brand new user, it's okay to let it be one or the other. It's okay to let it be either clear or not clear. As you grow with this software, as you get a little recognition, you'll know when it's cool to take that shot. So large chart says strength. Large chart says clear path. Now we're going to go to that refinement chart, guys. Now we're going to break it down into 20 to 30 bars on a smaller, faster chart. Rule number 3 for entry says that I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers, inside of triggers. So I'm going to use a limit order, which means I'm literally going to wait for the market to come to me. I'm going to use that limit order at an area, and I'm going to use fibs, mid-bands, yellow 1-to-1s on that smaller, faster chart. And I want that area to be inside of triggers, guys. And that's really the key. Large chart says up. Large chart says clear path. Large chart says look for an entry. Small crowd gives a shove, guys. They're going to shove us right back. How to add that full bar, the reversal bar marker, John? Sure, let me pull up a chart real quick. And guys, just for those of you that are new, I'm the worst tech guy ever. But there's a few things that I know. So Jonathan, right-click on your chart and go to Indicators. And under Fibs Pro Trader, is it Fibs Pro Trader? No, go to Pro Trader, Synthetic, New. You're going to see reversal bar marker number 1. Let me take a picture. And guys, this is one of those things. No questions are off base ever. Show reversals. Show reversal price, right? Pick your color. And it's right there in Pro Trader Synthetic News. So that should make it show. If you have those clicked and it doesn't show, John, do me a favor. Right click and just reload your historical data. And that should get you where you need to be. Awesome. Perfect, man. Perfect, perfect. So Rule number 3 says we're going to use a limit order, we're going to buy or sell a pullback, and we're going to do it at areas, guys. Lines on the large chart were problematic. Lines on the small chart are pretty awesome. They give the market some place to bounce to continue with the trend. So when you've got those two charts working side by side, guys, large chart says up, the background is green. We're working on the most current bar, guys. What we're doing right now is we are learning how to study. When the large chart says it has momentum, when the small and the large get above resistance, it's behaving as support. Guys, we're not trading tails, but the bottom of this tail is a pullback to support inside of favorable large triggers. This is where on a smaller, faster chart, you're going to pinpoint where the market is most likely to continue. We're not buying a tail because that takes forever. The market's all the way up here. We're literally going to dissect it. We're going to get an x-ray, and you guys are going to pinpoint with insane accuracy where the market is most likely to continue. But I want to share something with you. We need to do a quick trigger line lesson if you guys don't mind. And the way we're going to do this, because the rules say that it should pull back to areas inside of triggers. There's a reason, guys. So large chart has large triggers. Small chart has both large triggers and synthetic triggers. The synthetic triggers are nothing more than the large chart large triggers, guys. How do triggers come to be? Hell, I don't know. Who invented triggers? I don't know. What do triggers mean to me? That I do know. These large triggers, guys, are where I expect the price to come back to. On the large chart, I expect price to come back to these large triggers. On the small chart, I expect price to come back to these small triggers or large triggers. They're moving averages, guys, and there's this math thing, and I'm not a math guy, but there's this math thing, I think it's called regression to the mean. Someone feel free to correct me. Where price tends to come back to the average. Price tends to come back to the average. So what we did, oh my brother, I don't want to take credit for this, is when you recognize, maybe that's it. I don't know, Jen. I might have just made up words. Don't worry about the words. Worry about the idea that price tends to come back to large triggers. So on the small chart, when your large triggers and your synthetic triggers are overlapping one on top of the other, it means that you've got your correction point in the exact same spot. You expect price on the large chart and the small chart to come back to this area. Guys, this is what we call favorable large triggers. Favorable large triggers just means that your synthetics and your large are one on top of the other. It gives you the absolute smallest point where, yeah, for this one, yeah, because that was a math term, Rob. But what it means when the large and the synthetic are one on top of the other, guys, I expect price to return on both of my charts to this area. But I don't expect triggers to stop the market. This is my correction point. This is where those price bars should come to. So we add areas, fibs, midbands, yellow 1-to-1s inside of those triggers. So it's like throwing a tennis ball as hard as you can. The triggers may be 3 feet in front of the wall and 6 feet behind the wall. But the wall where you expect that tennis ball to bounce is fibs, midbands, yellow 1-to-1s. And guys, the further apart your triggers are, the more indecision there is. Because if the small chart may correct here and the large chart may correct here, that indecision decreases accuracy. That indecision is going to create more risk. That indecision might require a little confirmation to be able to get into that trade. So for the brand new user, favorable large triggers, guys, it pays huge dividends. How do we pinpoint where the market is most likely to continue? I'm glad that you asked. When the large chart says up, when the large chart says that there's odds favorable momentum, when the large chart has a clear path, I can't stress enough that your large chart rules need to be met. Your large chart rules need to be met. How many large trigger lines does it need to be inside? Your area? Cool. So Pete, you ready? Get your listening ears on. I'm going to show you exactly how to pinpoint. Exactly. I promise. Here we go. But you have to wait for the reversal bar. The reversal bar is that small crowd beginning to fight, guys. And a reversal bar signals the beginning of a pullback. This is not your entry for the high probability trend trade, guys. This is just a little shift in direction. It's a little loss of momentum on the small chart. And what we're doing is, Pete, once you see this reversal bar, instead of jumping in, you're saying to yourself, let me find my correction point. Let me find those large triggers, those synthetic triggers. Let me make sure they're one on top of the other. And let me draw a box just around my triggers from the highest point to the lowest point. Pete, I don't care if it's the large over the synthetic over the large. Work with me here. It's an order of operations, Pete. First, we're going to find the triggers so that we know where price is most likely to correct to. And then I'm going to look for the areas inside. And Pete, I don't care where they are inside. I want them above the lowest line, and I want them below the highest line of the triggers. Does that make sense, everybody? I'm looking for fibs, I'm looking for mid bands, I'm looking for yellow 1-to-1s. Doesn't matter where they are located. If they're inside, from the highest point of support, whether it's a mid band, a fib, or a yellow 1-to-1, to the lowest point of support, whether it's a fib, a mid band, a yellow 1-to-1. Guys, this is the point where the market is most likely to continue. This is going to be your window of opportunity. This is where you're going to activate your limit order at the highest point inside, because what happens is the large chart is screaming to the upside with nothing in the way. We're not going to trip over a couple pennies hoping to make some dollars. So your limit order goes just above the highest point of support inside of favorable large triggers. And if you speak to yourself in terms that these triggers are where I expect the market to correct, then you recognize that any areas beyond that correction point have nothing to do with the window of opportunity, guys. This is outside of where we expect it to continue. So from the highest point of support to the lowest point of support inside of favorable large triggers. And the same is true going the other direction. Start with a reversal bar. Once you have the reversal bar, absolutely, from the lowest point of the triggers to the highest point of the triggers. And then, Pete, I've only got one line inside, right? All I have is a mid-band. The mid-band is inside both. Yeah, but it's okay if it's only inside of one of the triggers, because it doesn't say pull back to an area inside of only the large trigger, or pull back to an area inside of only a synthetic trigger. Pete, the reason that I stress so heavily having them one on top of the other is because it lowers the area, right? So here I have a line inside of the large triggers. But Pete, I also have another correction point 16 ticks below. Do you see how there's indecision there? Do you see how I'm just not sure? So you will find trades like this, but the idea is that initially you can keep it very consolidated. You can keep it very concise, and you can pinpoint with pretty insane accuracy where the market is most likely to continue when you have those favorable large triggers. And what it does is it reduces risk as well. So when I wait for the reversal bar and I find my triggers and I recognize my areas inside, I know exactly where the market is most likely to continue. Which means that I also understand where the market shouldn't go beyond that correction point. That's where my initial stop goes, guys. 4 or 5 ticks beyond those trigger lines, beyond that correction point. And the cool thing is this reduces risk dramatically. When you go back and you study a little bit and you begin to recognize that these areas inside of favorable large triggers do in fact create the bounce when the rules are met, you're very comfortable putting your stop 4 or 5 ticks beyond it. And even more so, you're very comfortable letting that stop get hit every now and then, guys. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It's a normal part of doing business. It's a cost of doing business. It's part of a positive equity curve. But with all those advantages, you're more likely to get a confirmation bar, a reversal bar in the direction of your trade. You can reduce your risk even further below that reversal bar. And guys, it's not uncommon to see Nexgen users taking trades that don't go the distance, that don't work out, and losing $30 or $40 as opposed to $200 or $300. Because of the precision, you're taking these sniper trades, and because of very basic rules to protect your equity. It's not uncommon to take very, very small losers. And the cool thing is by waiting for the pullback, by trading pullbacks instead of just jumping in, and I want you guys to see this because this is a big deal. If price doesn't reach the fib, then it can't be a termination condition, which means that fibs off in the distance, guys, they become targets. By waiting for the reversal bar, by identifying the trigger lines, let's do it on this one, right? Reversal bar prints, that's not an arrow. Reversal bar prints, not my entry. I'm going to find from the highest line of the triggers to the lowest line of the triggers. And this becomes my correction point, but it's not my window of opportunity. My window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. Pretty common mistakes that new users make, guys. I'm going to walk you through them real quick on the entries. The reversal bar is not the entry, it's the signal of the pullback. Impacting the triggers is not the entry, that's just where we expect it to correct. We're entering at the highest point of support because this is the most likely spot for a bounce, guys. If the small triggers turn against you, it's okay. Momentum is defined on the large chart. If it's bouncing off of 1-to-1s, it's okay. Areas are defined on the large chart. Your initial stop goes right where the market shouldn't, which means that if the small crowd pushes and you're in that trade, let's get rid of some stuff. Small crowd pushes and I'm in my trade right at support inside of favorable large triggers. Every one of my rules are met. My advantages are in place. There's nothing for me to do. Price exceeds that highest point, hits the next area. I'm still in my window of opportunity. I'm still in my window of opportunity. I'm still in my window of opportunity all the way down to these yellow 1-to-1s inside of favorable large triggers. What does that mean, guys? That means that you might be in a trade and you might be down $100, but you're still in a rules met scenario. So you've got to be very mechanical and pragmatic. Your stop goes where the market shouldn't. And if you had odds favorable momentum, if you had a clear path, if you pick the perfect entry and it hits your stop, guys, you're going to take a small loss and you're just going to wait for the next trade. And that's the high probability trend trade, guys. And you're going to be able to go back, large chart, small chart. And you're going to be able to study this look, and you're going to be able to practice this look, and you're going to be able to find these circles, right, that you put on the small chart. On the large chart. Where's my small chart? Hold on. And you're going to be able to go back and take a look. Did it pull back to resistance inside of favorable large triggers? Not so much. They got those big split triggers, guys. They got multiple divergences in the same price range. And look at how it rockets back up. This area still hasn't broken. Kind of cool, right? Rules not met. What did this one look like with the potential to break? Whoops. Scroll back directly to support, right? Kind of in between those triggers. Monday mornings are tough to find the best of the best. So let's go back and circle a tail here. And let's just see if momentum is enough to create the advantages that we need. Nope, right at resistance. That's a weird look. That's not it. That was a termination condition that we circled. But that was a pullback right to the mid-band, right inside the triggers, guys. And I'm telling you, this is the pattern. We don't trade the tail, we trade the pullback. So you've got to study it. You've got to go back and look at it. You've got to wait for rules to be met. We still have momentum. I still don't have a clear path. I've had 1, 2, 3, 4, 5 divergences in the same price range. My triggers don't even match one another and they're separated. Can you give me a Y in the room if you can see how the rules are not met? Because guys, understanding when the rules are met is just as important as understanding when the rules aren't met, and you've got to be patient. Pete, did that answer your question well enough about the triggers? It can be inside the large, it can be inside the small, right? I don't even have any areas on the chart here. Momentum pushes, right? Weak triggers, reverses. Strong in, hit something, bounced, weak triggers. There's a reversal. Over and over, guys. You see this over and over. Strong triggers. 20 bucks says there was a mid band there. So not every move is your move. Not every trade is your trade. Not every look of strength creates a perfect entry. But if I circle that one and I go back, I can look and see if my rules were met. Whoops, wrong one. What was that at? 707? 3 divergences in the same price range, pushed it all the way back to the large triggers, the correction point, and then it started off in the distance. And guys, now we're odds favorable, right? Don't know if we have any areas. Let me put some areas on the chart and we'll see. And we'll see what happens. Well, we have a big ugly fib right there. It might be Morgan. How many workspaces are you running on that laptop? Just crude? All right. Sometimes you get a little corrupt data. One thing that I'll do, yeah, if I'm having troubles with it, I'll do this. I'll go to my documents. I'll go to NinjaTrader 8. Did you do this morning? Double click on the database and get rid of your cache and tick. You have not? So I would shut it down. I would do that and then go back to NinjaTrader 8. Go to your temporary folder, delete everything. Go back to NinjaTrader 8 and take off your recovery. And just so that you don't have to remember all this right in the moment, this is kind of one of those NinjaTrader 8 best practices. But getting rid of that cache and tick data, it kind of gets you started fresh. And it starts right here, where you can go through and do that. And that tends to be pretty helpful for me. So hopefully it'll be helpful for you. So Pete, the language says pull back to an area inside of triggers. Guys, the language says pull back to an area inside of triggers. Don't overthink it. If you don't have a line inside of triggers, you don't have a potential entry. It's really that simple. You've got to allow it to be. Where you did wrong here? So, did you post a picture, John C? You did. So here's the deal. So, John, I'm going to get to your picture. Exactly, Pete. And the tighter they are on top of each other, the easier it is to pick. So, this line is inside of only the large. This line is inside of both the large and the synthetic. This line is only inside of the synthetic. So yeah, perfect. John, I'll go back to your chart. So what I do, guys, is I talk about rules. I talk about rules. I talk about how to study. I show them what they look like. Second half of the classroom is going to be to take your pictures and give feedback. So if you post in the room and I don't jump on it instantly, it's because I'm going to go through this last bit of spiel that I have, John, and then we'll get you taken care of. I'll look at everything. We'll talk about everything. On that same token, if you guys have to leave early, like if you have to go to work or something like that, and I'm not quite to the feedback section, let me know. I'll find your picture. I'll go back. We'll talk about it before you split. It's important to me that you guys get feedback on everything. But this is where I give you guys a bunch of gifts. And the first one I'm giving you is Chart Reading 101. Most people are absolutely floored at the thought that they're going to have to work for $1 million a year. And I don't know why that's so surprising to people. This Chart Reading 1-to-1 is designed to get you where you want to be the absolutely fastest, guys. ASAFP. You've got to recognize some very basic looks to be able to catch these trades. You've got to be able to recognize strong triggers. And if you're looking for strong triggers, it's important that you know what weak triggers look like, because you've got to be able to talk to yourself and say, I don't have the advantage of momentum. There you go. It should, just right there into your account. I bought software. I should be rich. Guys, you have to understand a clear path, and you have to understand termination conditions. You have to understand those entries. So go back and take 25 pictures of each, guys. This whole 6 things is 245 pictures, I think. I'm asking for approximately, and not even in a day, space it out over a week, 6 hours of your life. 6 hours to go back and look at these and take pictures of these, and not just take pictures of them, but talk about the whys, right? Why is it strong triggers? Well, let's click one and let's see what it looks like. Strong up triggers. I'm going to click on a link. Why is it strong triggers? What did I write on this? Smalls are above the large. Wide triggers. Odds favorable momentum. Rule number 1 met. Buy Fibonacci support on a smaller chart with this look. Is everybody cool with that? That's strong triggers, right? That's rule number 1 without question. What if I click on another picture? It's the same look. What if I click on another picture? It's the same look. It's the same look. Guys, and it's annotated the exact same. The exact same. Why? Why am I doing this? I'm doing this because recognition comes through repetition, guys. And if you take the time out of your life to take 25 pictures of strong triggers, to write why it's strong triggers, to talk about what the advantage is and what the rule is for you, guys, you're never going to miss strong triggers. You're never going to miss weak triggers. You're never going to make the mistake of trading into termination conditions. So go through this. If you want to be a chart reader, if you want to be successful, if you want to get there as soon as possible, go through this, guys. I dropped it in the room for you. Steal it, use it. Feel free to drop it in the room and make sure that you're taking the pictures right. If you're not sure, check it out. This is the high probability trend trade checklist with pictures. There's strong triggers. There's weak triggers, annotated, telling you exactly what it means and what it looks like. There's a termination, there's the potential to break, and there's broken. It's very clear, it's very easy. There's your reversal bar. There's your triggers, there's your area. That's where your order goes. Guys, it is 100% defined for you in pictures. That one just got dropped in the room. Next, I'm going to give you a high probability trend trade checklist that you can print out, that you can put on your desktop. And let me say real quick, I've never had anybody in the history of this checklist do worse than 70% in their trading. I've never had anyone with the patience to wait for these rules to be met, to mark yes to each one of these and do worse than 70%. Something to think about. Somewhere between getting the software and creating a plan, our brains tell us that we have to be in the market every second of every day to get paid. And the reality is, guys, your best winning days are probably going to be the least amount of trades taken, because you're going to insist on having a statistical advantage every time you take a trade. And that's one of the signs of being a mature trader, guys, is over trading is a sign of fear and hope, and not so much having advantages. And then I'm going to give you the KISS plan, guys. I'm going to give you the KISS plan for the high probability trend trade, and I'm going to give you the KISS plan for that area with the potential to break trade. I'm going to give you both of them here. If you don't understand the high probability trend trade, that 50-50 trade is going to be too much for you. So this is a disclaimer. This plan is a stepping stone in your learning journey. This is not the end of the road for anybody, guys. This is the plan. This is the trade. This is the look that teaches you to read your indicators, and it optimizes your chances of success with the high probability trend trade. Goes back to that. I've had people get funded on those prop firms in their first 30 days with Nexgen by keeping it simple and focused with this plan. Your results may vary, but it can be done. It has been done. I've seen it done. The less you look for, the more you tend to find. So, through simulation, through study, through class feedback, guys, continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's AI coming together. My brother had a field day with it one week. That's saying that once you're a chart reader, you're going to see things. Once you look at your charts, guys, and you say to yourself, man, you know what? I have momentum and there's nothing in my way. Let me find an entry. Initially, it's a pullback to areas inside of triggers, but that's going to change. That's going to change all the time, the more comfortable you are. But don't forego simulation, study, class feedback, and continuous practice. Give yourself a little bit of time to become a chart reader, and that'll take you to being a trader. Your simple I can't talk. Your simple plan for consistency hasn't changed in 25 years, the 28 years that Nexgen's been around. Don't fight the large chart. There's no other way to say it. Don't fight the large chart, guys. You will probably be committing financial suicide if you are trading against strong triggers, fighting the overall momentum of the market and hoping that you win. And the same is true if you're trading into those termination conditions, guys. It's the old Anchorman thing. 60% of the time, they work every time. You do not have an advantage trading into termination conditions as a brand new user. But the cool thing is, and you'll dig this, is that through simulation, study, class feedback, continuous practice, you will learn your rules like a scholar. You will be able to break them like an artist, and you will understand when maybe it's okay to take a chance. When maybe there's enough advantages present to say, you know what, I'll take this trade, but I'm a chart reader, I'll manage it aggressively. So don't fight the large chart. Make it yours. Define your entry. Define your best trade. Define your advantages, guys. Personalize it. Hold yourself accountable to it. Write your rules on your chart and present them into my room, and I'll hold you accountable to them. And I'll tell you, man, you gave up those strong triggers, or you traded right into termination conditions. Here's how we fix it. Let's work together. Or I'll say, holy crap, that's the best looking highest probability trade I've ever seen. Let's make sure that this one gets over to your favorite look section. So guys, we're going to go through a short trade entry per the rules, and then we're going to talk about management, because management is the second piece of the puzzle, guys. You will craft a plan tailored to your personal goals based on your experience reading the indicators. But in the beginning, while you're becoming a chart reader, guys, while you're wrapped up in the adrenaline of trading, while you still have that fear of even losing the monopoly money that simulators are, let everything you do revolve around the large chart leading the way, right? Large chart rules are met. So you just wait for a reversal bar, and you don't jump in on a reversal bar. You say, now that I have a reversal bar, let me go ahead and look for those trigger lines, right? From the lowest line to the highest line. The tighter they are one on top of the other, the least amount of room there is for areas to be inside. So once I see my triggers, let me identify the areas inside. Fibs, mid bands, yellow 1-to-1s. And let me create that window of opportunity, that point where the market is most likely to continue, that best of the best. And then once I've got my window of opportunity, the only thing for me to do is to activate a limit order right at the base, right at the lowest point of resistance, and pray, because I've done all I can do. The only thing I will ever be in charge of as a day trader is whether or not my rules are met when I activate that order. That is the only control that I will ever have as a day trader. But the cool thing is if it comes back to that area inside of favorable large triggers, I'm in a short trade with the advantage of momentum dictated by the large chart, with the advantage of a clear path, once again, the large chart, and by pinpointing exactly where the market is most likely to continue with rule number 3. And this is where management begins, guys, because once I enter the market where the market is most likely to continue, my initial stop has to go where the market shouldn't. 4 to 5 ticks beyond the window of opportunity. And at this point in the trade, guys, once again, there's nothing for me to do. It's either going to come up and hit my stop, and I'm going to be okay with that because after 100 pictures of high probability trend trades, I know that this one wins more than it loses. I know that it creates a statistical advantage, and I become okay with losses. And I know that's hard to fathom as a brand new user. Guys, they've got to come get me where this market shouldn't go. If they do, cool. But with all the advantages that I had going into this trade, I'm more likely to get a reversal bar in the direction of the trade, which means that I'm going to reduce my risk 2 ticks above that reversal bar, and then I'm going to put my hands in the air, or I'm going to put them under my butt, and I'm going to do absolutely nothing, and I'm going to let the market do its thing, guys. It's either going to stop me out for a much smaller loss, that's okay, not worried about it, or it's going to run to my first target, guys. I'm in 2 contracts at the best of the best spot. My risk has been minimized, and now let's see if we can get to the first target. If we do, here's the cool thing. That's $100 in your pocket, guys. That's $100 in your account. You hear NinjaTrader say profit reached or target reached. Your palms stop sweating, and those butterflies in your stomach start to go away. And you start to feel confident because you're like, wait a minute, I identified momentum. And I knew that there was a clear path, and I nailed my freaking entry, and I just got paid. Holy shit, I can't wait to do this every day for the rest of my life. Pardon my French. And you're going to move your stop break even, guys. You're going to say to yourself, I got paid and I have absolutely nothing to lose. And this is going to help you sit on your hands and do nothing. And see if that momentum takes you to the second target. Having nothing to lose makes it easier to hold a trade. And if it goes to your second target, it's only $200 in the distance. Whoops, let me make that so you can actually see it. It's only $200 in the distance, which means that on one trade, 3 advantages, best entry, mechanical management, you just made $300, guys. And if you can do $300 and exit that trade and be comfortable with it, and that's the best you do every day, $300 a day, guys, when you break it down over the course of the year, is somewhere in that $75,000 range. $300 feels very insignificant to the average trader. If I'm not making $1,000 a trade, this is crap. And it's not, guys. It's not hitting home runs every time. It's having a statistical advantage. It's being very mechanical, doing the exact same thing every time because it creates an advantage. And that's how you get to where you want to be. Do this twice and you're 6 figures, right? Use one of those trade copiers, guys. If the best you did was $300 a day, but you did it on 20 accounts over a trade copier, you're making $6,000 a day, guys. You're making $30,000 a week. You're making $120,000 a month on the same high probability mechanical trade. So get good at it. Be okay with only having that trade. And then eventually, you say clever things like, well, when I hit 1-to-1s and the triggers remain above, I probably shouldn't go short. And sure enough, shorts didn't work. And you'll be able to look at your chart and say, man, that never broke, and 3 divergences said that it probably wouldn't, and I didn't have to give any money away. And now I'm into resistance, and oh, this is crap. My large triggers are flat, my small triggers are up, but I've reached an area, all the triggers are below. Does anyone have rules met for a high probability trend trade long here? I don't. Which means that I have to do absolutely nothing. So, guys, that's the first hour. The first hour is designed to give you something to fight with, to give you a chance. For financial suicide, all 3 rules are met. Weak triggers directly into terminations, yeah. And Morgan, I know that it's not PC. You're not supposed to say suicide because it's a real problem. But it resonates, doesn't it? Why would you give it away? 90%, guys, 90% of your day is doing nothing. And the difference between successful traders and the traders that are struggling, in my experience, I'm not gospel truthing this at all. In my experience, it's the people that hope when they say things like, it should break through this area. Guys, there is no it should. All we have is a pattern that says that it hasn't, right? It should continue down from here because of this. No, my indicators are telling me up. And if you really get to that point to where all you do is talk about terms of advantages. If you have rules written out right on your desktop that you can police yourself with, and you learn how to speak in terms of these rules, guys, nothing's going to stop you. You're going to be amazing. And life is going to be just fine as a day trader. And the more you deviate, the more difficulties that you'll have. So that's my first hour, hour 18, I suppose. Are there any questions about the high probability trend trade, guys? Are there any questions about momentum? Are there any questions about termination conditions? We can go back and study them, right? Price reaches resistance, triggers remain below. This should be your picture. You guys want to do a picture together? I know I have new people in here. Steve Diego, you're brand new. Welcome to the room, by the way. Guys, when you downloaded Nexgen software, it gave you capture software. When you downloaded your demo, it put capture software on there. Go to your search bar and type in TechSmith. It'll give you that capture software. Guys, this is how we take pictures. And I'm going to go 2 charts, and I want to do a quick tutorial before I take a break today. If I click the capture button, if I hover over one chart, it gives me one chart of information. So I need to click and drag. I'm going to left click and pull my mouse to the bottom right, and I'm going to release. And once I release it, it's going to tell me to take a picture. And then once I take the picture, it's going to give me what's called the image preview. And the image preview is how you and I are going to have a conversation. So if you're studying termination conditions, let's say you woke up this morning and you said, I want to get good at termination conditions. I want to get to the point to where I never trade into these areas and give my money away. Then click and drag the box. It'll make it bigger. It'll make it smaller, right? So I'm going to put it right around that textbook termination condition. I'm going to do the same thing with an arrow. I can click and drag. And, you know, a longer arrow means, hey, this is more important. And then the call out button, guys, this is the most important tool that you can use. Left click and drag it down and give yourself a little bit of box to talk here. And say, use the language, right? Say price reached resistance. Triggers remain below. This is a termination condition. Is everybody good with that? So I'm not taking a trade, right? I don't have any fear of winning. I don't have any fear of losing. I don't have any commitment to one direction or the other. All I'm doing is I'm saying that price reached an area and the triggers remain below. This is a termination condition. What does that mean? That means not a clear path. That means that rule 2 not met. And I want you guys to see something. If you take this picture, if you annotate this chart, if you draw these arrows, and most importantly, if you upload it to Screencast, it puts it in the web, copy it, and I want you guys to drop that picture in the room. And then once you do, I'm going to go, all right, Steve, let me see what you did here. Steve says that price reaches resistance, the triggers remain below, termination condition. And I'm going to say, Steve, this is absolutely perfect. You absolutely nailed the lesson on rule number 2. And Steve's going to like, whew, I got it right. Let me open up my spreadsheet and let me go to the 101 tab and let me drop that termination picture right in here so that I can come back and study it, so that I can become an expert on it, so I don't ever get fooled into trading into termination conditions that have the potential to stop the market. And guys, that's how you get good at being a chart reader. So the capture software, Steve, hold on one second. You can come to your search bar down here and type in TechSmith, or you have to spell it though. So if I start typing in TechSmith, it should bring up the TechSmith capture. If for some reason it doesn't, here's the link to get you to TechSmith capture. It's about a 2-minute download. And guys, here's also the link on how to use it and present in class. And I like to do this. I like to make sure that you guys are comfortable with this, because guys, this is how we talk. This is how you and I have a conversation. This is how you tell me what you see. This is how you tell me what you're doing. This is how you get all the answers that you need. is by posting in the room. And I'm going to do one more thing because total noob, you were asking about how do I place an order, right? How do I get in the market, Mark? How do I work those stops? How do I work those targets? Guys, we get in with limit orders, and there's two ways to do it. And the first thing, let's see what you got, total noob. All right. Why? Do you have momentum? Hell yeah, you do. Total noob, write it on the chart. Do you have a clear path? What do you think? I don't know. You tell me. Let me show you how this works. Yeah, I'll get right back to that, Rob. So total noob. Are the small triggers outside of the large triggers? Are they wide? Are they angled in the direction of the trend? Let's just talk through it. Super basic. This is what I do every time I'm looking for a trade. I think that's a yes, right? You nailed that momentum look, total noob. We're going to change your name to just noob because you're no longer a total noob because you identified momentum like you were getting paid to do it. So now I have to look at where the top of that bar is. And I have to ask myself, watch this. Did price reach an area? Did both small and large break? Because that's the recipe for a clear path. That's the recipe for a clear path right there. So total noob, what I do is I ask myself this question. And the answer is no. The answer is that my smalls are above, but large not. That's that 50-50 look. And no matter how much I want it to be, it's never a clear path. And that's okay because there still might be options, right? And I'm going to tell you right now, I'm going to draw the shape from the top of the triggers to the bottom of the triggers. And total noob, rule number 3 says, buy or sell a pullback at an area inside of triggers. And I think that you nailed it, right? First weekend here, and you nailed it. That's perfect. Well, actually, maybe a tick or two above rather than below because fibs qualify too. So you missed it by 2 ticks. So what we're running into is our problem, our challenge, is that the area is not broken yet, right? That it's only the potential to break. It's not a clear path. That was it right there. And sure enough, it didn't break, did it? So what it does, total noob, is it puts you in this mindset. I do have momentum, but I don't have a clear path. Rule number 2 is not met. So what this does is this puts you into what we call a medium probability trade, total noob, which means that while the area has the potential to break, it's not broken, which means, let me go to this right here. I make this, it's like a slide ruler. I love this. Which means that no matter how much I want it to be, my clear path is missing. Does that make sense? And this is the feedback that you guys will get every day when you tell me what you see. So you've got to go back to these 3 rules, which means that I'm not going to forfeit momentum, total noob, and I'm going to make sure that my entry area is rock solid. Are you cool with that? If I don't have a clear path, I'm not going to forfeit my other 2 advantages. And what we ran into here, do you remember when we said that divergence is a loss of momentum? And this is awesome. So what you did is you had a setup for a 50-50 trade. And it was coming from a termination and you had momentum and the smalls were outside. But this very simple plan that I dropped in the room, total noob, and I'll drop it again, says that if divergence prints, don't take the trade. If there's divergence on the small chart, don't take the trade. If divergence prints, this is the #1 killer of that 50-50 look, especially for new users. And total noob, check it out. You saying, oh crap, divergence, no trade, keeps you out of a loser. And that's one of the cool things about what we do, guys, is the two plans that I gave you are designed to optimize your chances of success. So you can either choose to follow it or not. That's up to you. That's the part that I can't control. But total noob, I loved your large chart read. And I think that you nailed where the market would have been most likely to continue. And now we've just got to get you always talking to yourself in terms of those three advantages. Because once you know that the path isn't clear here, it's going to adjust your thinking on whether or not you're willing to take an entry. Does that make sense? And guys, this is what we're going to do for the next 2 hours. Is total noob. We're going to go through every chart and we're going to look at it, and I'm going to come back to it with that exact same approach. What were the advantages? Were there disadvantages? Let's go take a look at it. So, welcome to Nexgen, guys. That's what we do every day. We learn the rules, so we know when it's okay to trade, right? You guys simulate, you practice, you post in the room. Use that spreadsheet, fill it out, learn the looks so they become easy. And then total noob, you got real quiet on me. Did that make sense, what I just talked about? Does it make sense why we're not looking for this entry? Does it make sense that rules are put in place to keep you from taking unnecessary losers? And all you have to do is learn the rules. Commit to learning the rules. Commit to the looks, guys, and you won't be just giving away money hoping that things work out. So that's my first hour. I'm going to go run a lap, guys. Awesome. No, totally cool. Totally cool. I like it when you guys listen. I'm going to take a break. When I come back, we're going to click through everybody's pictures, guys. I'm going to go from top to bottom. We're going to hit them all. We're going to talk about them. We're going to talk about advantages. If you have a question about someone else's chart, ask them. But don't be the trade police, because everybody's in a different place. And there are people that are going to take trades that don't make any sense to you. Feel free to ask about them, but don't go, hey, that's not a high probability trend trade. You shouldn't have been in it. Because once you're a chart reader, you will be empowered to craft your own plan. Guys, I'll see you in 5 minutes. All right, cool kids. Let's get back to work. Just so you guys know what I'm up against here, I have to scroll all the way to the top to get to the pictures that are posted. And then I scroll back down to try and catch up with you guys to answer any questions that you may have. So if I get lost in the shuffle and miss a picture, don't get mad at me. Just tell me. Just go, hey, Mark, I think that you missed something. And I'll be like, man, let me go find it or repost it, and we're totally good. And then we'll be all right. Paul got us going today. Paul makes money on the high probability trend trade. Everything is down. The market is strong. Absolutely perfect. I love it. Two divergences kind of mess up his party. And then that third divergence kind of confirms that the market may be changing. And then Paul, three divergences is good. But you're still smalls below the large clear path. Everything says down. You took a shot against the small triggers, synthetics down, large flat, not from an area. And I'm not entirely sure why you took the long. And I know that you're working on some things. But I can tell you guys that just because it's not a short or just because it's not a long doesn't mean that it's a short. The market is notorious for bouncing in between areas. And Paul, you're trading directly into resistance with every trigger line down below it on your large chart. This is a very low probability scenario that worked out for you. So I always love it when you guys get lucky. But it's not high probability. And then Paul, 50-50 trade from a bad top, no divergence, perfect entry, and they got you, those sons of guns. And then when you get the reversal bar, you get back in, and then you do get divergence on that 50-50, and sure enough, it's a deal breaker. I think you followed the rules. You did exactly what you were supposed to do. It just didn't work out. Not a high probability scenario. For me, the weak top is a huge red flag. And then it's a good look. And I'm usually of the opinion that when the best look doesn't work, I'm okay staying out of it. I like the looks though. Where did you trade it? Well, and that's hard to recognize, Paul. And gosh, my brother and I were having the same talk this morning. But we don't always think about it, right? Because we were so caught up. Whoops. I'm going to say you, but I don't mean this in a bad way. You were so caught up with this right here, right? Thinking, oh my gosh, it might go up. That we didn't even discuss the idea that when price retraces to resistance and all the triggers are below, it's a termination condition. And it's funny because my brother and I had the exact same conversation this morning. Let me see if I can find it. This was the NASDAQ this morning, Paul. So it was a termination to a termination to a termination to a termination. And I was just like, holy smokes, there's nothing for me to do. And my brother's like, it's probably setting up the short. It's probably setting up the short. And I'm like, but dude, there's support. He goes, yeah. He goes, it's garbage. He goes, but so many people are going to get fooled into that short trade and not stepping back and looking at the big picture. So I think what you did was totally normal. I think the pivot stop out right there, to take this trade, you took the best shot. But I've gotten to the point to where I don't hope areas will hold. I'll just sit on my hands and wait a minute for the best of the best. And then Pete, let's see what you did. Triggers down and separated, odds favorable momentum. Pete, are you with me in here? Oh, you're welcome, Paul. Good stuff. All right, Pete. I am your pain in the butt Jiminy Cricket. You ready? You got momentum. Beautiful. What rule did you forget to talk about on this chart? And I want you guys to see how important it is that you're in this constant state of going through all three rules. Rule 2 says that if price reaches an area, whoops, and the triggers remain above, no short trades into the area. So Pete, let's go through the very basic. Price reached a divergence low. The triggers remained above. No short trades into the area, right? That one little conversation with yourself keeps you out of the loser. No, you're okay, man. And Pete, I've got to say it, and I say it a lot. You have to make these mistakes. You have to F it up a little bit. Because if you don't, Pete, you don't get the lesson. And if you don't get the lesson, I don't nag you. And if I don't nag you, I don't annoy you. And you'll stop trading into termination conditions just to shut me up. And if that's what it takes, I'm totally cool with it. And then this one right here, you did have the momentum. And everything set down and it was good. And it just bounced. And you see how your large triggers are up here, the synthetics are up here, and your large are right here, and you don't really have an area inside of either of those trigger areas. So that's where rule number 3 says, pull back to an area inside of triggers, right? And if you keep that language just that very basic, no, your large chart, I like the first one. Large chart says down, it says momentum. The challenge is, and let's turn it into a chart read real quick. If I don't reach this area, then this is really my first place for a bounce right here. Does that make sense? If I'm not coming from an area that reversed the market, it's just kind of hovering out in the middle of nowhere, my mid-band is always my first spot for a bounce. And it doesn't mean that it's going to stop the downward. It doesn't mean that the market can't continue down. But typically, there's a group of people that might give the long one more shot there. So I make sure, Pete, that my rule number 3 is solid if I'm going to take that trade. Does that make sense? And this one, just termination conditions got you. Was the mid-band long potential? So, Paul, you had the gap theory on the 21? Awesome, Pete. Great. It's a great post. It really is, because it lets me come back and kind of embrace the idea that the less you put into it, if you always talk to yourself about these advantages, you'll be pretty good. So, Paul, you said that your 21 chart said up here. Oops, sorry. This one. So the 21 said up, but the 13 said down, and the 5-1 said, hell, I don't know. All right. I'm inclined, Paul, and you may be different, I'm inclined to believe whichever chart puts me in a trade, because it's more fun to be active than it is doing nothing. So the more charts I give myself, the more rules I give myself, the more chances I give myself to take a trade, I'll always lean towards it. That's why it's so important to make sure that you've got solid rules, right? Now, Paul, if your 13 was trading from an area, right? If it had reached an area, I love the aggressive long. All right, Mr. Flowers. Strong top, price reached an area, triggers didn't break, everything reverses, beautiful. Odds favorable, separation of triggers, small below the large, rule number 1 met. Rule number 2, clear path, no terminations in sight. Thought this was a high probability trend trade, but triggers rolled over on the 5-1 chart, created a pivot point. Didn't notice that until you took the trade. Stayed in the trade to see what it will do. Closed it out when it was apparent it wasn't going to continue down. Market had a change in direction on both charts. Close your position. All right, Mr. Flowers. No, it's okay, Paul. There will be times to take that one. I love your read. And it is advanced. It's okay to show me the third chart, though, Paul, as you work on new stuff. I'll talk about it 100%. All right, Mr. Flowers. Gold star, beautiful on both counts. But here's where we ran into a challenge. You said clear path. And this is where I'm going to go back to language. I'm going to go back to, hopefully, simplicity. Let me find it real quick. I've got the picture for you. All right, Paul. This is the termination condition, right? Price reaches the area and the triggers don't break. Are you comfortable with that? Of course you are, because you called the termination condition at the top. The path is clear 100% when the small triggers and the large triggers break below the areas. And that is when it's high probability trend trade. That's when there's nothing in the way. That's when it's just like this floor dropped out, odds favorable, momentum, holy crap. The only thing that's going to keep me out of this trade is 3 divergences on the small chart. Does that make sense? Pretty black and white in the beginning. So where you fell was right in the middle of that, what we call the 50-50 look. In a 50-50 look, means that your small triggers have broken through the area, but the large triggers haven't made it yet. So no matter what you're hoping, price, or not even price, hold on. This area has the potential to break, without a doubt. It's not broken because the large triggers are still above. Not a clear path. Rule 2 not met. This is a medium probability trade. Does that make sense? And this is why we take those pictures of it too. So it's not quite clear. And then Paul took the same one. So the first thing, your entry is perfect. And if you go back to that KISS plan, you had every criteria met to take this entry, 100%. And do you remember when I said earlier that divergences kill 50-50s? Were you guys listening to that lesson? Because that's a big one. When I give the KISS plan for 50-50s, it says no divergence, says divergence, no trade. So Paul, you were rock star on your entry. You took the perfect entry. I couldn't, if I tried to pick it apart, I couldn't. It's beautiful. And then when you understand what kind of trade you're in, it sets you up to manage it properly. And that, I think, is the best lesson on what we did here, is when you understand that it's not the clear path, you are literally looking for divergence. So when it starts to fluctuate, you're saying, man, if divergence prints, I'm going to hit close. And you would have been out right here, almost break even. But because you thought it was a high probability trend trade, which is totally okay, you managed it a little differently. You gave it a little more freedom. And this is why I think it's so important to understand, to go through, to talk through it, to make sure that you understand what kind of trades you're in, because it's going to affect the management on it. Yeah, and I would have not even blinked. If these fibs weren't there, there's nothing that would have pulled me out of that market. Nothing. But because it was 50-50, that was enough to get me to jump ship. So it's a great trade. You fit the rules for the KISS plan 100% until we got to management. So nicely done, Mr. Flowers. And guys, sometimes the difference between not seeing it today and seeing it every day for the rest of your life is posting that trade in the room and just letting us have a conversation about it. So the exact same thing. Let's take a look. No divergence, good top, odds favorable. Morgan, great annotation. Perfect entry. Nope, there's no lines up there, Morgan. Right? What are the rules for entry? Areas inside of triggers. Those are the only areas that you have, Morgan. Beautiful recognition. And then it does push up, right? And you hold it, which is cool. And I don't know why you got out at 92. Got out here because small triggers didn't look great? All right, so Morgan, management, right? Okay, so your divergence was at 90. I see it. You get out a tick or two above. So let's discuss this one. No, it may. Morgan, it always may. Here's what you have to accept. It may bounce. It may go against you. It may run you over. It may call you names and push you down and steal your milk money, right? Who cares? You'll never be in control of that. The only thing you'll ever be in control of is whether or not your rules are met. Your rules for entry were beautiful. You were consistent with your stop placement. And then you just, oh shit, I gotta get paid. Pardon my French. I apologize, guys. Sometimes I accidentally swear. Let's pretend I have Tourette's. So getting out of trouble, I agree with 100%. But I want you to see something. You're going to love this because this is a good lesson. I hope you love this. Synthetic triggers are down, right? Large triggers are down. Small triggers are straight down. And you said that the small triggers didn't look great. Morgan, you sat through all of the nonsense and then it finally started going down, right? They're down here too, brother. They were green here and you stayed in. So, Morgan, once you're in this trade, right? The only thing that, no, you're right where you're supposed to be. When I'm in this trade, the only thing my large chart has anything to do with it anymore is maybe a target. Other than that, my management's coming from the small chart. Does that, and it's hard, right? Because the large chart leads the way. It probably made the fib, didn't it? May have, I don't know. It's a great trade, but management's hard, guys. Management got hard. And Morgan, you don't have to answer, but if you're still on sim, and guys, sim affords you the testicular fortitude to hold, even through fear. Because there's no fear of loss. You can't lose money on sim. The only thing that you can have happen on sim is you walk away from a trade smarter. You walk away from a trade having seen the patterns, what it did, annotating the charts. Guys, you can't affect your quality of life by losing money on simulator. You just can't. Adriana, odds favorable. It is a clear path. The fibs quit printing. Your 8 o'clock update. Everything says go. You take the perfect entry. You take a predetermined target. And then you ride that bad boy all the way down to the termination condition. Adriana, absolutely stunning trade. And then you have the 50-50. You take the same entry everybody did. You had to move tick to the stop to stay in the trade. So it came close. You kept it outside of the synthetics the same way Morgan did. And then you took them off just above the Fibonacci area. Beautiful trade. I like it when you guys take the same trades. That makes me happy. because it means that there may be something to these rules. It means that there may be something to these rules. And it did. Everything set down and it went back up, didn't it? That's all right. I guess my point is, don't let fear be the reason you exit, right, Morgan? Have a reason. Because if your large chart looks like this, I mean, you'll always find a reason to exit so that you don't give it back. Let it run through a couple times. Be willing to give a couple. Odds favorable. Termination trigger full bar away. John C., I'm not sure what that means. This is some NASDAQ ugly going on here. Or at least give it a... Go break even. So Morgan, go break even and give it a chance to run, right? Why not? Why not? All right, John C., love the momentum read. Absolutely perfect. 100%. Looks great. Momentum, momentum, momentum. So I'm just going to put a box around the fib in question. So 50-50, 50-50, 50-50. Totally cool, right? But the area hasn't broken yet. No worries. The challenge with this one is divergence right from one-to-ones, divergence with weak triggers, divergence with big split triggers, kind of ugly. NASDAQ is a completely different animal. It really is. NASDAQ is a completely different animal, John. And you would have had to have some faith in the system. Faith in the large chart. On the NASDAQ, if there is divergence at my low, I absolutely insist on a reversal bar. That's one of my own personal rules. You don't have to incorporate it if you don't want to. But it's a 50-50. There's divergence everywhere. The areas are floating in between triggers. And you see how if you put a limit order at these one-to-ones, whoops. John C., are you in here? I want to make sure that I'm not just spinning my wheels here. It is. It's a freaking monster 10K. So John C., here is one correction point. Here's your other correction point, right? And these are kind of hovering in between. Does that make sense? It took me 3 years, John, to recognize that these were correction points. And I'm not proud of that, but it's a true thing. So when I've got the indecision, right? And this looks great. When I've got the indecision, I love, especially on the NASDAQ, I love a good confirmation bar. I love, man, if it's ugly, pivot stop out down here, let me let it just go. And the only place that I have a line inside of triggers is that resistance right there. Which means that if I'm being super basic on the rules, this fib is the only line inside of a trigger that I have. And then, how long have you been trading NASDAQ? Some people, I love it. That's like all I trade. If you are interested, one thing that I did, 3 years, cool, John. This helps a lot for me. And I blew out a lot of accounts learning this little trick. So on the NASDAQ, I want to share this with you. And hopefully it makes sense. And again, I don't tell anybody how to trade. When I'm looking for my entries on the NASDAQ, John, if price reaches the area inside of triggers and my small triggers are less than a full bar away, I'm patient. That's where I 100% insist on a reversal bar. 100% insist on a reversal bar. And if it never happens, it's cool. I don't get run over. If I reach the area inside of favorable large triggers and my small triggers are a full bar away above the reversal bar marker, very often on a 13-2, I'll enter at the area because I've got room to get back to that point. Learning this rule right here paid huge dividends in my own personal NASDAQ trading. So I'll drop my spreadsheet in there again, and if you want, maybe it'll be helpful, maybe it won't. Go through that yellow section. I've taken a lot of pictures, annotated a lot of charts for the NASDAQ trading. And then if you have any questions about them, please ask. Your large chart was so beautiful all the way down. NASDAQ just requires a little different entry. If divergence says wait for a reversal bar, you're short, making money. Divergence says wait for a reversal bar, you're short here, making money. Divergence says wait for a reversal bar here, you're short, making money. You're going with the flow. NASDAQ just requires a little bit of patience to get the best of the best, I think. And we've all been, anybody that's traded NASDAQ in this room will probably raise their hand and say, I have been slaughtered by those small triggers. And one of the reasons is that happens is that you have to remember on the NASDAQ, your small chart is a 13.2. Your small chart is the large chart on any other market that you're trading. So it turns into a completely different set. And then Paul, I think we saw that one. And then John C., we got you on the full bar there. Total noob. I think I went sideways on your lesson for entry, so I need to go back to that. One thing that I do sometimes, guys, is I get distracted like squirrels. GWC has turned this trade into an absolute powerhouse. When his large chart has momentum and a small chart has momentum, he gets in on the left side of the triggers and gets out at trouble. And GWC, you absolutely crushed this trade. Momentum for the win, guys. I told you in the beginning, momentum, people are going to have these plans that revolve around momentum. Steve Diego, it is the big yellow section on the spreadsheet. It's under the 4th tab. So this is where I've done a lot of work, and this is the NASDAQ. One thing that I encourage people, and again, I have to say, I don't tell anybody how to trade. I don't tell you what to do, when to enter. I talk about rules and advantages. If you can't recognize your rules being met, whatever your rules are, if you can't recognize your rules being met inside of 2 to 3 seconds max, NASDAQ is probably going to be too fast for you. So that's where crude oil and the S&P offer a huge advantage to learn your patterns. And then you can take them over because the NASDAQ takes a little different setup as well. There's a little different on the entry and stuff on the NASDAQ. So guys, GWC, new users are like, oh, but there's terminations everywhere. And GWC is like, I am such a believer in momentum on every chart that I know it's hard to stop that freight train. And GWC, I love everything about your trades. He just jumps in, but he jumps in based on pattern recognition. All right, John C. Pivot stop out, right? Beautiful bottom, odds favorable momentum. The path is clear, and you get absolutely smoked. All right, John C., I want you to see something. And I appreciate your posting on the NASDAQ. When price reached this area, those 13.2 triggers were coming down just like a scalded dog. Do you see it? Do you see how strong they are here? And I'm telling you, they act like resistance. This is a great thing. This is where if this bar comes up and closes on the correct side, I'm long all day long. But until I get a close on the correct side of those triggers, I'm just not fighting that. So here's one from the NASDAQ again. And it's cool. Once you recognize this pattern, right? As it's pulling back to the areas, by insisting on that close below, it buys you a little patience. And everybody that I've worked with on trading the NASDAQ, being able to include that into their plan has done wonders for their win percentage. Or actually, it's kind of done wonders for lowering their loss percentage. And guys, when you're a chart reader, you will find entries. So John, I don't think you did anything wrong there. On any other market, that's a beautiful long trade. On the NASDAQ, the rules change. Everything says up. The momentum is good in GWC. You keep capitalizing on this momentum to the tune of $2,000 right there. That's a good day, my friend. So nice. So nice. Steve Diego, would you show me a picture? It only has price. Do this for me. Steve Diego, are you with me? Right click on it and reload your historical data for me. 9 out of 10 times that fixes coming into a Monday with that. And if you right click as well, just a couple little how-tos, there is a template section. So you can always reload that 13.2 Renko. But usually the reloading all historical data does the trick when that happens. I had to do it this morning for mine as well. Let me know if that works for you. If it doesn't, we're going to get you with Jason and he'll get you all squared away 100%. I always tell the new guys, I'm not a huge tech guy, but there's a couple little tricks that I know. Awesome. All right, let's take a quick break. Check this out, guys. New guys, play along with me here, okay? Did we have strong triggers or weak triggers? Right here. I want to go back to rule adherence, keeping my flock safe, right? Anything can happen triggers. Ugh. But we did have a clear path, right? Didn't reach an area. Clear path. So rule 1 isn't met, but rule 2 is met. So let's go to the tiebreaker. Here's my triggers. These are the only areas. Do you see how rule number 3 doesn't give me an entry? So if I was still tempted to take the long, basically what I did is I said that I didn't have momentum. Let's use our little slide rule. I did have a clear path, but I didn't have a rules met entry area. Ladies and gentlemen, is there anyone in this room that looks at giving away 66% of their advantages as a reason to take a trade? If you speak in terms of the advantages, guys, it keeps you out of losers so often. It doesn't mean it's not going up. It means that I don't have an entry area. It means that I'm guessing whether it's going to be this fib or this mid-band or this fib or all the way down here. And the reality is I just don't know. I hate admitting that I don't know, but once I start doing it, once I start saying my only options are rules met, rules not met, it takes a lot of the stress out of my life. Jonathan says weak. I disagree. Everything's still down. Yep, okay, nope. It's not odds favorable. It's not necessarily weak. I want to show you guys something cool. You'll find a way. Jonathan, if you jump in because of momentum, you got to make a decision on the loss of momentum, right? If you jump in on the wrong side of the small triggers, it's not a momentum trade, and you're probably going to get stopped out. And then let's see what else you did. And here you take the short with the large chart, and it's pretty easy. 3 divergences takes you out. And then once again, not on the right side, and you get stopped out. No, you don't. You held that one against 1, 2, 3, 4 divergences. And then you try to go short again. Whew, that's a lot of work, Jonathan. That's a lot of work for not much money, if any. I'm not sure if you made money in this whole ordeal or not. But there's so many opportunities to just let rules keep you out. I love the momentum trade, Jonathan, and I support your endeavors looking for it. But it's got to be consistency. It's got to be the same look every time. And the more you change it, the more variables you throw into the mix. Andy says, odds favorable, clear path. So what does that mean? Only one area inside of favorable large triggers, Andy? Is that a positive or a negative? I just want to make sure. Easy choice. That's what I was hoping your answer would be. If the rule says a line inside of a trigger, you only had one spot to take this trade from, right? That was a hell of a trade. Nice job. And then right here, it's a pullback to support inside of both triggers, right? So if you miss this one, there's your second chance to get up to Fibonacci resistance. Awesome picture, Andy. I hope you caught it. All right, scrolling. And then Total Noob, we looked at yours. And then Paul Flowers, let's see what you got. Termination condition. Yep. Termination condition. Yep. So, Paul, are you telling me, and correct me if I'm wrong, that because of a termination condition, you didn't lose any money trading into the area? Because that makes me happy. Did you notice that your large triggers were a full bar away too? Guys, this is what we call the gap theory. Remember what I said when we're talking about entries? Guys, this is a great lesson. If we expect price to correct to the large triggers, and those large triggers are more than a full bar away, price is more likely to close the gap, especially if it smacks into something. So to not hope a short works is outstanding. This is part of your 90%. Paul, these are the most impactful pictures that you'll ever take. Taking a trade is awesome, guys. Taking a picture of your chart read and committing that chart read to memory and practicing it and getting better at it, that's how you become a trader. Odds favorable, 50-50. Perfect entry makes manageable trades. If you didn't take that one, they gave you another shot. Absolutely beautiful, John C. What's the difference between the two? All right. John C., are you with me? You notice the gap theory. I love that, Paul. All right. So let me just make sure that I understand the question. Sometimes, guys, it takes me a second. Turns out I'm a man and I don't communicate well. So we're asking about this fib and this fib, right? What's the difference between the two? So I'm going to give you two different answers if that's cool, John. The first one is that if price hasn't reached it, it's nothing more than a target if you find yourself in a trade. Was it the short that you took, Paul, that you posted in the room? Right on. It hasn't been a big moving day. And it wasn't even high probability, was it? But that's okay. Guys, some days you're the boot and some days you're the butt. Some days there's just nothing to do. I haven't taken a trade today at all. It was 50-50. Awesome. So, John, there's the first one. If price doesn't reach it, it's just a target. If you're in a trade, when price reaches this line, you're going to check your triggers, right? And if you're in a trade up here, when price reaches this line, you'll check your triggers. But here is the here's the lowdown on the hoedown here. Let me open up this one for you. So there's different looks, right? There's a fat one and a thin one. There's skinny ones. There's fibs that extend all the way to the right, and there's fibs that seem to stop short. And here you go. Guys, another one of those little 60-second blogs. I wrote it on this one too. So on your large chart, John, you're going to have, and since you're NASDAQ, the areas are different, but you're going to have 3 time frames. You're going to have a lower time frame than your large chart time frame, and you're going to have a higher time frame than your large chart time frame. So if we were looking at the S&P, this right here is your 13.2 fib. It extends all the way to the right. If it's the NASDAQ, that's a 34.5 fib. The skinny fib that doesn't extend, this is from the 5-1 chart. Or if it's the NASDAQ, it's from the 13.2 chart. The fat fib, that's hard to say, is from the higher time frame. So if it's the S&P, it's a 21. If it's the NASDAQ, it's a 55. So John, what you're looking at on yours is the blue lines that extend all the way to the right are native to that large chart. The one that stops short is from your small chart. This one is from a higher time frame, and this one is native as well. But the rules for termination conditions say when price reaches an area and the triggers remain below or above, that's how you get your termination. So we're not weighing them out, right? You should count every line on your large chart. Don't make one stronger than the other. Don't make one more important than the other. If we're on the large chart and I have yellow 1-to-1s and the triggers remain above, it's a term. And if I have resistance and the triggers can't break, it's a term. And this one happened to be native. I think that one happened to be native. This one happened to be from the 5-1. There's a divergence low. So, and there's the highest time frame as well. So I don't rank them, right? It's either if you reach a line, go through the process. Does that answer the question? They're from different time frames, but the rules don't change regarding what time frame they're from. Awesome, cool. I love those questions, guys. Those are the questions that make us all smarter. And I need all the help I can get. So thank you for that, John C. Andy Man. Termination, odds favorable, 50-50. Divergence prints, you have to have confirmation with these wide triggers. Amen. Notice how this area is not inside of it. That's the only line inside of a trigger up there. Great read. No trade there, Andy? Nice. Sometimes it's not the trades you take, it's the trades you don't take. David says momentum is our friend. Let's see what he means. David says when the market bounces off a term and everything is screaming in the same direction, he's going to get paid. David, this is beautiful, my friend. You and Mo rocking it out, right? Look at that odds favorable. Everything's on the momentum phase. Everything says up. Holy crap. When 4 charts agree, how could it go wrong? Beautiful trade, David. Mo is the guy that you want to invite to every party. All right, Pete, let's see what we have. All right, so Pete, my hope, prayer, wish, and want for you is that you never say, is this a good area to enter support? But showing me your butt, right? Here we go. Here comes the annoying mark again. Do I have odds favorable momentum, Pete? Give me a Y or an N. I'm going to make you start thinking about advantages. I have odds favorable momentum. Okay, so let's turn it into a lesson. It's inside, isn't it? Am I looking at it wrong? I feel like they're inside. Would you agree? This would be slowing. One in, one out. Once they get in, party over. Okay. That's an important part of the lesson. It really is. Because when you want to take a trade, Pete, you will tell yourself that that's odds favorable momentum. But if you take 25 pictures of this look right here, and you say that's odds favorable momentum, you're never going to get Huskow. All right, so we have that anything can happen look. So let's go termination conditions. Did price reach an area? That's the first part of the equation. Did price reach an area? Guys, everybody feel free to play along. What do you think, Pete? I don't see any areas. I don't see any fibs. I don't see any one-to-ones. I don't see a divergence high. So I do have a clear path, right? I want to go back to my slide rule here. Let me unvandalize it real quick. So we gave up momentum. And that's okay. We still might find a medium probability trade, Pete. And we did have a clear path, and that makes me happy. So let's go tiebreaker. You ready? There's our reversal bar. Let me draw from the top of the triggers to the bottom of the triggers. Let me see if there's any areas inside of those triggers. There's not. There's none, right? So Pete, as you get comfortable, I want you to do this. I have no odds favorable momentum. I don't have any areas inside of triggers. 60%, 66% of my good mojo is missing. Do I take the trade anyway? And only you can answer that, right? But Pete, if you're not making money every day, if you're not consistent every day, why would you give up 66% of your advantages, right? And let's see what happened. I feel comfortable saying you would have been stopped out. And I feel comfortable saying that you would have been stopped out again if you tried it again, right? And then, oh my gosh. And I guess the point that I'm making, and Pete, thank you for that picture. It's a brilliant picture. Is just because you think it's going to go up, just wait for rules to be met, right? And Pete, I'm not going to lie to you. I would have been waiting for the long. I never would have even considered the short. But for me, I have to get some confirmation factors in. And I never had anything that said, I'm ready to go here. Never had anything that said, I'm ready to go. Unless you took a close on the correct side of the small triggers and hoped for the best, as the market is trading way the hell out here in space. And it's pretty cool how eventually you'll get to this point where you will just talk to yourself and you'll say, hey, do I have that advantage? Do I have this advantage? Without these advantages, I'm just going to choose not to take the trade. So I guess to answer your question, if you have to write but, it's probably not the best of the best. If you have to write even though or almost or anything like that, it's probably not your trade. Not yet. It may be one day, but there's a big difference between it should and it will. Dude, these are the pictures, Pete, that make us better. These are the pictures that will change your trading forever because it encourages you 100% to only look for advantages. And if you find them, take a trade. And if you don't, sit on your hands. So really want to jump in with momentum, clear path down, but just chilling. So, all right, Rob. Directly into a fib. Large triggers are up. Smalls haven't even gotten all the way out of the large, really. Not a trade here. And Rob, let me show you the other side of the coin on this one. if, and this is crude oil, guys, and we watched crude oil go up. Rob, if I had Fibonacci resistance right here, and this is the difference, Rob. If I had Fibonacci resistance right here, guys, can you give me a Y if you can hear me? I want to see if it's me or just Rob. Okay. Rob, you'll need to reboot. So check it out. If this was a term, I'd consider a short. Exactly where Rob called it. Because in 2024, no, this is 2024. In 2004, yeah, it probably did, Morgan. In 2004, guys, Nexgen taught a trade. Let me find it. That said, if Fibonacci resistance holds and the small triggers roll, sell a pullback to the small triggers. So if there were a fib right here, guys, and those small triggers roll, Rob nailed it, 100%. That's the 2004 edge trade. This is taking one shot to see if this area is going to stop the market. But the biggest thing, and this is so important, without a termination condition there, the probability goes down drastically. So Rob, it was a beautiful read. So Rob, if this were coming from a termination, selling that pullback to the small triggers looks exactly like you called it there, I would be 100% on board. But because it's not a termination, because it's that pivot kind of coming from nowhere, this trade is so much less likely to work, especially with the large triggers up, especially with them still up over here. It's a really tough trade to take. Does that make sense? That's where having that termination's better. It's an awesome read, but because it wasn't a termination, look what it did. They weren't done, guys. They're going to 77.03. This is why fibs are so powerful. If they can't reach an area, the sellers push. Look at your large triggers. Guys, they wanted that number. I'm telling you, fibs are freaking amazing. You guys should write John Novak a thank you letter, because these things are awesome. Jonathan asking if I have comments. Jonathan, you know I have comments. I've got all the comments. You were concentrating on my class and you looked at this. Odds favorable, clear path. And Jonathan, 100% perfect. That was your momentum entry. It's okay, you'll get there, Rob. It takes time. Rob, when I started with the software, my brother's like, all right, there's your long. And I'm still looking at the large chart, trying to figure out what the heck's going on. Speed comes with repetition through keeping it focused. You'll get there. But Rob, what you're doing is you're not looking for high probability trend trades anymore. You're looking for all these other trades. So you never let yourself get good at one thing before you started looking at other things. That is going to stall the process a lot. It's going to slow the process down a lot. For you guys that love momentum trades, Jonathan just gave you the best example that you'll ever see. The double OK means you've told me this 10 times, I just don't believe you yet. So Jonathan has every advantage on the large chart. I know, man. The problem is I'm a pain in the butt and I won't quit on you, so we're going to get there. When the small triggers exceed and price snaps back, Jonathan, you absolutely nailed the entry. 100% beautiful. And there's your loss of momentum, saying that things are going to get a little dicey. Who knows what's going to happen? So from these one-to-ones, there's a great opportunity to make some money. Nice read, Jonathan. And Paul says, odds favorable, 50-50. Area right at the triggers. He wants to see what happens. What happened? So Gerard, I'm going to address that in a second. It never came and got you? Aw. It didn't, did it? Man. Sometimes it's just not your money, which is a pain. It came close. It just didn't get you. Oh, man. That's tough, isn't it? It happens. Andy says, you know what? They missed my entry. I'm going to get in on the right side of the green triggers and take it up to trouble. And Andy, that's a nice way of capitalizing on it. That's that momentum phase. Looking, because when this says we're going up, we're probably going up, right? So Paul, maybe your next step as you grow with the software a little bit is when it doesn't get there and it gets back over to the correct side of these small triggers, if you've got room to make some money, it's not a lot of money, but it's a quick little snippet, right? Large trigger said go. I'm trying to give you guys everything. I'm trying to give you guys everything that I own to make it better. So Gerard, first and foremost, I want to say I'm sorry you're frustrated. And I get it. I understand the frustration. I have it myself some days. But Gerard, let's go through it together. And let me share some of the stuff that I do. And guys, I got to tell you, and I used to think that there was something wrong with the programming or whatever. So the software, the DLLs are the exact same whether it's 7 or 8. And the challenge isn't with the software, guys. It's with Nexgen. So you went through and you worked with support to manage your files a little bit. Cool. And Gerard, there's a couple little things that you can do that help. Just little like NinjaTrader 8 things. Don't drag. Don't drag huge on your chart. Like don't grab your charts and go, woo! And maybe we'll crash mine, right? That's one of the problems that creates problems. If I'm in a trade, let me make sure I'm on sim. If I'm in a trade and I try to add more trades up in here, and I try to move things here, and I try to push this up here, and I try to do this down here, sometimes all of that will mess with my NinjaTrader as well. If you write on your charts and not on that TechSmith capture or Snagit, that can create some challenges here and there. I only run typically 1, maybe 2 workspaces at a time. If your computer can't handle it, if your graphics card isn't there, I know there's challenges. I'm happy to say that the browser version is very close to being completed. And there's a light at the end of the tunnel, but these little safeguards, trying to stay on top of things and not do all these little things. And I know it's a pain in the butt, Gerard, and I'm sorry that it's a pain in the butt for you. And you're good. Nice one, John C. First PA trade with Nexgen. 335. Hell yeah. I love that. And Paul, that's perfect. If that's all you're looking for, that's all you're looking for. So Gerard, I feel your struggle. I've had days where it's crazy, and I've had some days where I go like a week and it never happens. Paul trading the potential breakout is what Paul's doing here. Paul doesn't have a clear path, but he has momentum, he has momentum, he has momentum. And Paul takes the little snap back to support when the triggers break, trading the momentum. And I don't know how that one turned out, Paul, but I see that you got paid quick and you have virtually no risk at all. Good looking trade, guys. There's that momentum look again. You guys remember that one? Jonathan, you pointed it out perfect, right? And it's not a clear path. You're trading the potential for the breakout. Get paid. Absolutely beautiful. Cover that risk. Paul, nice trade, man. Nice trade, nice trade. Have you been watching the Be on the Correct Side of the Smalls? Andy has. It's been paying huge dividends for him. Helps a lot. So if it never gets back up there, it's probably problematic. All right, guys, we made it through the pictures. We made it through the pictures. And they're trying. Outbreak even, probably. What do you want to talk about? It's rare that we get through the pictures before the end of the class, guys, but we're on your time now. What would you guys like to talk about? Oh, so Steve, you probably closed out your workspaces. So one thing that you can do, let me go to the Nexgen page. There's two ways to do it. The first way is to go to the resources page. And you can run, sorry, I'm multitasking. You can go through and you can rerun the indicators and it'll do everything brand new for you. Steve, I just put my crude oil workspace into the room for you there. So you'll want to take that one and extract it if you want to go that route. Or if you want to start fresh, run the indicators. Just rerun it. But there's your path on where to put it. So either one, I don't have any special workspaces. I'll share mine all day long, guys. And that'll work. No, Morgan, there's absolutely nothing off topic. So that should work for you. So there's two routes. You can either steal mine, or you can go to the resources page and run the download the indicators, and it'll get you squared away. And then Andy Man, right click, go to indicators, go to T3 Fibs Pro Trader Synthetic New. Mine isn't, Jerry, because I update mine every day. There's mine. There's the most 100% current version of mine. I just dropped it in the room. There is one on the website though, guys. If you don't want my stuff, if you're proud and want to do it yourself, there's the link to it. You can grab it. I don't know what the difference is between this one and mine. This one, oh, you know what? Oh, I think that opened mine up, so. We'll just save it, but that'll get you there. Not there yet, Andy, sorry. Squirrel. Squirrel. I told you guys I get distracted sometimes. No worries, Morgan. Dude, this is your classroom. Take advantage of it. So Andy, T3 Fibs Pro Trader. I think I already dropped this picture in the room. Let me see real quick. Hold on. I don't remember if that was today. I deleted it. That's okay. Let's make another one. T3 Fibs Pro Trader, new. Reversal bar marker 1, show reversals, show reversal price. So that's exactly where to set it up. If that doesn't bring it in, reload your historical data, and a lot of times that'll get it as well. Yep. So right click, go to indicators, go to T3 Fibs Pro Trader Send New. Scroll down, you're looking for reversal marker 1. This will be the one native to the 13.2. Make sure that it shows reversals, and then I like to see the reversal price. I don't know why, I don't really need to, but I do anyway. And that'll get you squared away, Andy. And then just so that you have these when you bring the indicators up, that picture's there. Yeah, no worries, man, I got you. Muser, I always have a starting point. I always have my strategy, and if I'm trading the NASDAQ, my strategy every time I enter a trade is a 24 tick stop, 40-60 target. And then depending on what my indicators tell me, I might adjust those. If my large chart is screaming with nothing in the way, I might go for a longer target. If it's a problematic 50-50 trade, I may be shorter. So I let the market tell me what I'm going to do with my stops and targets. But always stops where the market shouldn't go. Guys, excuse me 1 second. I'll be back in 2 minutes, and we'll cover everything. Give me 1 second. Real quick. Depends, Muser. I always start with a 2 lot. It just depends on where I'm at. Sometimes I'll add on a position. Sometimes I'll trade a 4 lot. There's no absolutes other than my rules. So there's no absolutes other than my rules. If this is my entry, Muser, at 77.05, my initial stop when I enter that trade is going to be at 92. 12 ticks or 93. 12 ticks. That's it. But where the market shouldn't go is all the way up here. So I have to adjust it, right? If my first target is on this side of the line, well, maybe my target moves below the line because I know that lines can stop the market. So it just depends. It depends on the trade. But I typically start with a 2 lot, and I'm not afraid to add on. And then, all right, so Morgan, I'm going to give you the best lesson on getting you started on HVA trades. Let me make sure I'm not missing anything. Sunday school answers. You ready, Morgan? Let me go to the HVA trade. Tops and bottoms and triggers. Rule number 1 is it must be a good top or bottom. So Morgan, rule number 1 says that you have to have a termination condition that absolutely no triggers break through, which means that if you're not solid with termination conditions, you're going to struggle with the HVA trade. And you're good with termination conditions, right? I've seen you trade right into them. I got jokes. And then, once you have your termination condition established, you have to make sure that the market hasn't gotten to that next area. So if you're in at a bottom, Morgan, right? You can't look for an HVA into all these termination conditions. So that's the second rule, is you have to have a termination. You're good at that. And you got to make sure you're not trading into a termination condition. You're good at that, right? And then it just becomes the entry. It's the exact same kind of entry. And the rules say that you have to let an HVA line on your range chart and I don't know if the rules are met or not. I'm going to look for one. And I'm looking for one that's kind of glaring and obvious. And I'm not seeing one yet. But once you have that termination, we'll say this is our termination. Once you have room to get to your target, your HVA trade is going to look very much like this. You're going to get an HVA line, a green line. This is the concentration where the buyer said, I'd triple dog dare you, right? And it needs to be inside of triggers. Your triggers have to roll. Here the triggers didn't roll, so it's less likely to work. So let me see if I can find like the perfect storm. Let me find a picture for you. I want to say that I might even have... I think I took all the HVA trades out of here. So when I'm talking HVA trade, first I have a no triggers through termination condition. Once I have a no triggers through termination condition, my triggers need to roll. Once my triggers roll, I'm looking for an entry at the green line, right at my small, right at my large on the smaller, faster chart. So some of the most broken rules on this one, Morgan, are not actually having a no triggers through termination condition, and that kills it. The second thing is jumping in before the triggers roll, because if the triggers never roll, it's probably never going to happen. Yeah, that was your HVA long right there. Termination, triggers roll, right at an HVA line. So everything starts with the term, and then the roll, and then the entry. And one of my favorite pictures, and I used to show this one in the room all the time. HVA rules say no triggers past the fib. If they do, it's not your trade, right? But once everything rolls, this line is kind of like a line in the sand. Steve, I'm not sure what GreenShot screensaver is. Can you upload them to... One thing you could do maybe, Steve, is right-click on whatever picture you've taken and copy the image and just drop it in the room. See if that works for me. But the whole idea, Morgan, is that termination condition on the large chart. You have to let that lead the way. And that's like the most broken rule. Because people decide that they're looking for these HVA trades, and they start taking every freaking HVA line that they show. This is a range chart. This is gold from 2023, the June contract. It's showing the importance of allowing the triggers to roll. And the reason I do that, this is a picture that I took a long time ago. It's the same picture. Well, same scenario anyway. And guys, I call this one might versus has. There is a scenario as the market is accelerating into this Fibonacci resistance where it might hold. This is where your brain says, I think resistance will hold. Your brain might even tell you that resistance should hold. But you'll notice that with this strength, it creeps up, it creeps up, it creeps up, it creeps up, and eventually the triggers roll. So Morgan, this is a big part of it. If this is really going to be a top, these triggers are going to roll on that range chart. And if the triggers roll, then I look for my opportunity right there at the HVA inside. And here's what's cool. And this is the part that I always loved. Is Morgan, check this out. This price where I hope it holds is the exact price where my rules are met to try the short. So it's filtering. It's that patience piece. And John used to tell me that all the time. Mark, if this is really going to be a top, everything's going to roll and go down, right? If this is really going to be a top, everything's going to roll and go down. Nothing blinked, even a little bit at these key areas to suggest that the market was going down. But check this out. Right there at 808, I'm flirting with disaster here. I think this is going to be a top. It can't be. The triggers are going to roll. And the HVA gives you an opportunity. Let's just see what the range chart looked like right at this area. Let me draw a little ring around it. So you had your termination, your triggers rolled. Where was that? Was that? Oh, I'm going the wrong direction with it. So there it was right there, Morgan. There's your rolling triggers, and it just didn't give you an entry. But that's kind of what it looks like. When you have the termination, they're going to roll. In a perfect world, price would have pulled back to this HVA, and we all would have gone short, and it looks like we would have made some money. Pretty cool, right? So it's just the next trade. It's the next opportunity for you that's out there, guys. Eventually, you get so good at termination conditions, you find something else to do with them. But remember, get really good at one thing, and then you'll be able to add in other stuff. Jonathan. All right, Jonathan, we're going back to Sunday school. You're welcome, Morgan. If I don't have momentum here, if my smalls are inside of my large, if I don't have momentum on either chart, how can I take a momentum trade? Crazy, right? But look at the flip side. When I have momentum on both charts, there's all sorts of opportunity. But what you're looking at here, Jonathan, is the tail end of momentum. You're looking at momentum slowing. And this is where, and you wrote on there, maybe possibly wait for lower entry, right? When you're losing momentum, the retracement's more likely. I hope that makes sense. Paul W. Everything says up, right? Boom, there's the entry. And Paul, we're good, right? I can tell you without question that's a chicken shit entry or exit, with all due respect, because we've had some good time talking about it. Why on earth did you put it right there? What happened? You still had a whole nother correction point. I like that you got back in. But there was no reason to exit yet. Are you exiting because it was a momentum trade that didn't work, so you didn't want to risk a lot? That's cool. I can get on board with that. And then that's probably your entry on the reversal bar here. Establish risk, and then just, I love that you got back in. So I'll pick on you just a little bit for that exit. And I will absolutely celebrate that you had it in your head to get back in and ride it up to that next resistance. That's the difference, guys. That's the difference between a novice that spends the next 10 minutes pining about that loss and the guy that's done his homework and says, holy crap, nothing's changed, let me get paid. I love it, Paul. I pick on you because I appreciate how much time you spend in here keeping me busy. But the fact that you got back into this trade is outstanding. And you knew exactly where it was going. Nicely done. Jonathan, odds favorable, 50-50. Pull back to support. Still have momentum. Not a clear path yet. Not quite. Jonathan, do you see it? Do you see how man, they're so close, but the large aren't quite above the 1-to-1s? That's about as close as you can get. And you've got that one line right there at the bottom of the triggers, and you take the perfect entry. And man, gold is a pain in the butt. What happened? This is where if I'm in right here, my stop is somewhere 4 or 5 ticks below. Stopped out. Can we talk about that stop placement? So your initial stop is 12 ticks, right? Your initial stop is 12 ticks, which puts you all the way down here. I want you to see something kind of cool, Jonathan. Is that really where you still want to be in this long trade? Below the fibs, below the 1-to-1s, on the wrong side of everything, above the mid-band? That's probably not it, right? Steve Diego, right click. That's not the workspace fault. That is data. Reload historical data. Right click on the 13.2 and reload historical data. You've got something scrambled in there. That should fix you. Does that make sense, Jonathan? This is a great management lesson. You nailed the trade. Absolutely beautiful. I can't find anything wrong with it. This is where the market should continue. And look at your entry. Like a sniper. If we count off from 23.9, 23.4, it's only 4 ticks difference. But at that 4 or 5 ticks below, dude, it's just not doing what you expected it to do anymore. It's okay. And I'm going to tell you guys right now, gold is almost as temperamental as the NASDAQ. Gold is the NASDAQ's angry little sister, guys. And it doesn't always flow smooth. Jonathan, did that make sense on stop placement though? Beautiful trade. Really well done. Nicely taken. $40 adds up over time. If you save $40 every day, that's a couple hundred, right? Paul, you've never been booted for language. You'll get botted for language, yeah. That's why I have the microphone. They can't get me. Nice job on this one though, Jonathan. I like the look. And I like that you didn't jump in on the wrong side. You were super patient and you just waited. Really well done. Right on. And that comes with time too. That comes with a little bit of time and experience as well. All right, guys. Man, we made it to the end of class. So let me say a couple things. If you're brand new with me, thank you for being here. I want you to understand that the more time you spend looking for the pieces of the trades rather than trying to catch all the trades become easier. You start focusing on the process rather than the result, and you'll be amazed at how quickly the results come. It takes a few days to get the terminology. It takes a few days to feel comfortable. It takes a few days to piece it all together. So give yourself a little bit of grace, guys. Give yourself a little bit of grace. Let's see what you look like, Steve. 77.37. So here's what I need you to do one more time. I want you to right click on your chart and go to data series for me real quick. And I want you to make sure that this box is checked. Right here, tick replay. This is what gets those synthetic fibs onto your large chart. So it looks like you're almost there. And then once you have it and you save it, you don't have to do all this stuff. You removed it from your workspace. You deleted it out. So here's what I do. You haven't closed the workspace yet, have you? You just deleted a chart and said, oh crap. You did. Did you save it? So if you didn't save it, if it asked you to save and it said no, and you said no, open it back up. Everything should be just the way you left it. And that's a little trick, guys. So if I close out this on accident and I'm like, oh my gosh, what did I just do? All I have to do is go to my workspace for crude and close it and say no, and it'll bring it back. Is it just one chart or is it all of your charts? Golly. Is it just one or is it all of them? Well, all the charts of CL or only one chart on the CL? Okay, so here, do this. This thing's coming in handy today. There's my crude oil. Drop it in there. So drop it into NinjaTrader 8. You're going to have to extract it. NinjaTrader 8 workspaces. Drop that CL in there, and that's just my workspace. Set it up to look like you want it to, Paul. And then Steve Diego, did that work? Did you click the tick replay? And you're absolutely right, Gino. This is me. So building charts. Practice it for a little bit, guys. Gino's absolutely right. Yeah, Steve, that looks good, man. Look at me as the tech guy. Awesome. And then again, Paul Flowers, you can always go to resources and just rerun them all. It'll overwrite and give you new stuff. But Gino's absolutely right, guys. You should go through and you should learn how to build charts, and you should learn how to save workspaces, and you should learn how to do all those things. Because they're not hard. It just takes a little practice. And guys, this is the last one. I'm going to go play Day Trader 2. Why? No, Jonathan, you have absolutely every day until you're sick of me, Steve. Why did you get in there, Jonathan? Because you stopped annotating your charts, right? You got so caught up in the moment that the only annotation you got me was, okay, this worked. However, end of momentum caught up at the top of the exit. The same look that didn't have momentum anywhere, right? Jonathan, it means that you're hoping. Weak triggers, divergence, divergence. The only reason to stay in this trade is because you hope it doesn't stop you out. Oh, Steve, thanks for being here, man. Excited to work with you. Go get some socks, Andy. But Jonathan, these are the ones, man, you gotta have a reason. And your reasons are okay with me, always. Getting close, huh? Gino, termination, triggers rolling. It's not inside of triggers, so it's a little bit iffy, right? It's not inside of triggers, so it is just a little bit iffy. And the smalls haven't rolled? It is potentially, I agree with you. I do agree with you. Gino, I need you to fly to Dallas and give me golf lessons. I'm not sure why you haven't done that yet. So Jonathan, I don't have any rules for that. How are you going to repeat it? Right? Awesome, Morgan. So Morgan, go back and do that, right? Rather have Beetlejuice. Did you play in a tournament this weekend? Man, I went to, and guys, that's it for class. I'm going to BS. So Gino, they opened this place by me. It's called the Golf Ranch, and everything is TrackMan. So you go through and you hit and you see everything and you get feedback. And the one thing I don't have is a coach. And yesterday I was crushing it. I was hitting 190-yard 7-iron straight as an arrow. And then at some point, my body forgot how to swing. And I went from beautiful straight shots right where I want them to be to I couldn't hit the ball if it was sitting on the edge of the club. And it was the weirdest phenomenon. It's like I completely forgot. So, of course, I come home and I hate golf again. And I'm like, man, same ball position. I mean, same everything. My mechanics changed. And I couldn't get back to the good one, right? Same, yeah. So I'm at that point, Gino. I'm like a new trader where I get it right a lot, but I also get it wrong a lot. And once I get consistency, watch out. But I'm just stoked. I'd love to be at a point where I feel like I could play in a tournament. I could play in a scramble. Like you and I could play in a scramble. I hit enough good shots that we might use one shot throughout the day. That'd be awesome. I'm still trying to get John to put together the Nexgen golf tournament. So when he does that, we'll all meet up in Florida and play golf one weekend. It'll be fun. Maybe we'll talk trading too. So, guys, that's it for me. Have an awesome afternoon. We'll do it again tomorrow. We'll just keep doing it until we can't do it anymore. If you have any questions, guys, feel free to reach out. Otherwise, I'll see you tomorrow at 9 a.m. Take care, everybody. You guys be good. Oh, man, I'm telling you. That'll be fun. It's going to happen, Morgan. We just don't know when yet.